Very good morning, everyone. How are you all? Everyone fine? Last class we were doing financial instrument chapter. Today we'll not continue that because we'll take a new chapter, that is chapter number 1. So we'll start chapter number 1 today. What is chapter number 1? Conceptual framework for financial reporting under Indian accounting standard. What is the meaning of framework? Framework means a roadmap or any approach based on which Indian accounting standard will be developed. Correct now. So it means ICI has issued this conceptual framework for the development of Indian accounting standard. Correct, for the development of Indian accounting standard. Now one question will be in your mind, sir, why we are doing this chapter right now? Means why not initially? The reason is that this chapter has used many terms which you were not knowing initially. But after completion of many Indian accounting standard, you are used to that terms. So it will be very easy for me to explain that terms right now while going through this chapter. Second point, this is a totally revised chapter. Means before means last attempt, for up to last attempt there was some other chapter. The name of the chapter was Framework for the Preparation and Presentation of Financial Statement under Indian Accounting Standard. Now the name has been changed and the entire chapter has been also changed. Means it is an amendment. Amendment means important from examination point of view. Whenever there is an amendment, because this amendment will be applicable from May 22 and onward exam. So of course it will be an important from examination point of view. Now whether a question will be asked or will not be asked, that I don't know. But any amendment is important from examination point of view. Correct? But this chapter is totally theoretical. Totally theoretical, and it is based on what? Very basis, means it is based on fundamentals of what? Accounting. Means if you read this chapter by your own, you will be able to understand. If you go through this chapter by your own, you will be able to understand and you don't require my help. But I know that you will not read. Therefore, I need to read on your behalf. Correct? However, while reading, some explanation will require that I will give. Correct? But very simple chapter to understand. Not difficult chapter. Can we start? Yes, we can start. Correct. So the name of the chapter is what? Conceptual framework for financial reporting under Indian accounting standard. You can see it has been divided into many topics. Topic 1, topic 2, etc. And how many pages total? Total number of pages 27 pages in this chapter. However, it is more than 27 pages. Means I have compressed this chapter from examination point of view. Means what is required, that I have retained, what is not required, that I have removed. Correct? I hope you are understanding. Yes, sir. So let us start. This conceptual framework for financial instrument, this conceptual framework for financial reporting under India is not a standard. It is not a standard. So one clarification has been given that this is not a part of Indian accounting standard. It is not a part of Indian accounting standard, and it will not override the requirement of any Indian accounting standard. Means this conceptual framework cannot override any requirement of Indian accounting standard. Means in case of any differences which will prevail, conceptual framework will not prevail, Indian accounting standard will prevail. Understood? So it does not override any standard or any requirement in any standard. Correct? Therefore, this does not form part of set of standard pronounced by standard setter. Means standard setter means who has formed that Indian accounting standard. Correct? Yes, sir. Now, who has developed this conceptual framework? ICI. So ICI has developed this conceptual framework under India's corresponding to IASB. IASB, I stand for international. Whenever there is I means international. Correct? So International Accounting Standard Board Conceptual Framework 2018 means it's just a copy paste of international conceptual framework. ICI has only copy paste and has developed this conceptual framework which is required for the development of India's. Correct. Yes, sir. So what is the purpose of this conceptual framework? What is the purpose of this conceptual framework? So some purpose has been given. Let us read it. So first purpose, it assists ICI in formulation of Indian accounting standard. So whenever Indian accounting standard will be developed by ICI, ICI will take the help of this conceptual framework to develop any Indian accounting standard. Correct. Formulation to be based on consistent concept. Can I see there should be some consistent concept based on which some India should be developed. So it will provide the consistent concept based on which Indian accounting standard should be developed. Yes, sir. It assists preparer to develop consistent accounting policies when no India applies to a particular transaction event. So I hope you remember India's 8. India's 8 has given has given that there is whenever there is no specific Indian accounting standard for a transaction event, then what need to be done? So as per India's 8, in that case, management need to form accounting policy based on their own judgment, but the judgment should be based on some source document. The source document can be mandatory or it can be optional. So they have given some mandatory source document. In that first, we need to apply the Ind AS which is related to the similar transaction event. I hope I have given some example that grant received from non-government agencies. So for that Ind AS 20 is not applicable, but Ind AS 20 has given accounting policy for similar transaction. Therefore, we can apply Ind AS 20 as per Ind AS 8. If there is no related Indias also, then we'll apply what conceptual framework. Then we'll apply conceptual framework. Understood? So as per India said, whenever there is no Indian accounting standard for a specific transaction event, then we can develop accounting policy based on conceptual framework. Correct? That is only given. It assists preparer to develop consistent accounting policy when no Indias applies to a particular transaction event, or when an India allow a choice of accounting policy. A choice of accounting policy. So of course India, many Indias has given option for accounting policy. The best example which I can give right now is cost model or revaluation model for property, plant and equipment and intangible asset for subsequent recognition. Now whether to follow cost model or whether to follow revaluation model, for that we can apply what conceptual framework. Understood? Yes, sir. Then it assists all the party to understand India's correct and interpretation of India's. So how to interpret India's will be also based on conceptual framework. Understood? Yes, sir. Once again, a clarification, nothing in the conceptual framework under India's override any India's or any requirement of any India's. Means whatever we are doing, it cannot override any India's or any requirement of India's. Correct? Yes, sir. This point you have understood. Correct. Introduction over. Topic number 2, objectives of general purpose financial reporting. What is the objective of general purpose financial reporting? What is the objective? What is the objective of general purpose financial reporting? To provide financial information. So to provide financial information about whom? About reporting entity. To provide financial information about whom? About reporting entity. That is useful to, that will be useful to the user of financial statement. Who can be the user of financial statement? Useful to existing and potential investor. Existing means shareholders, potential means who want to invest in the company. Yes, sir. To lender means financial, any bank who has given loan, and other creditor. Other creditor. Can you say these are the primary user of the financial statement? Primary. I hope when we have done India's 1, we have done the meaning of materiality. In that I have used the term primary user. Primary user means who will rely on the financial information given by the financial statement. Correct. For making any conclusion. So these are the primary user of the financial statement. So who are the primary user? We can say the shareholders and potential investor, the financier and other creditor. Other creditor. Understood? So that is useful to this person in making decision relating to providing resources to the entity. Correct? So this is the basic objective of general purpose financial reporting. Correct? Now this decision, when I am saying in making decision, so which decision? Normally this party will take some decision. Which decision? Correct? Yes, whether to make investment or not. So this decision involve decision about buying, selling, holding equity or debt instrument. Equity or debt instrument. Now you know the term equity and debt instrument from which chapter? From financial instrument chapter. Understood? Correct. So buying, selling, holding equity or debt instrument. Yes, sir. Providing or settling loans and other forms of credit. Other forms of credit. Yes, sir. And exercising right to vote or otherwise influence management action that affect the use of entities economic resource. So normally can I say based on financial information will vote also. Correct now. Suppose there is a resolution of dividend declaration. Correct now. I hope you are understanding. So we'll vote based on the profit. Will be vote based on the profit. Profit will be from what? Financial statement only. Yes, sir. So these are the mainly decision. Correct now. You can understand this. You can also understand by your own. It does not require my help. Correct. But then also I will do it because I have taken fees from you. Now what is the limitation of general purpose financial reporting? There are many limitations. Correct? Means can I say financial statement does not provide any information about future. Correct now. This is the first and very important limitation. So what they want to say? They do not and cannot provide all the information. They do not and cannot provide all the information that existing and potential investor, vendor and other creditor need. So it does not provide all the information which this person needs. Correct? And are not designed to show the value of reporting entity. Can I say which financial statement we are not able to calculate the value of entity? That financial statement information can be used to calculate the value, but that will not show the value of the entity. Understood? Yes, sir. So are not designed to show the value of reporting entity, but they provide information to estimate the value of reporting entity. Means prima facie from the financial statement, can you find out the value of reporting entity? No. But can I say whatever information has been given in that financial statement, from that we can estimate the value of the reporting entity. I hope you are understanding. Yes, sir. And are not primarily directed to other party. Means the information is not relevant for other party, for example regulator and the members of public at large. Correct now. Means they can be many other user of financial statement. So it does not primarily directed to other parties such as regulator and members of public. Understood? These are the some limitations. Some limitation. When I am saying it is not primarily directed to other party such as members to public at large, means it does not give other information which may be required for the members of public at large. For example, if you know about social benefit and cost analysis, social benefit and cost analysis. When I say every entity provides some social benefit, for example, employment generation, correct now. So any entity will provide some social benefit to public at large, but to provide that social benefit, they will incur some social cost also. For example, pollution created. So the analysis of social benefit and cost is not given in the general purpose financial reporting. Understood now? So it might happen that public at large require that information, but that is not provided by financial reporting, general purpose financial reporting. Got it? Yes, sir. Limitation understood. Now, information provided by general purpose financial report. What are the information provided? There are two major information. One is financial position information. Second is financial performance information. Correct? Means financial information. One is financial position. When I am saying financial position, so it means what? Asset liability equity. Asset liability equity. So economic resource of the entity. Economic resource of the entity means what? Asset. Economic resource of the entity means asset. Claims means what? Claims means what? Liability, liability, and equity also you can say. Correct? Equity also claim, but there is no obligation to pay. There is no obligation to pay. So claim include liability. Understood? So this is the financial position. And second financial information which is provided by the financial statement is the effect of transaction and other event that changes entities economic resource and claim. Effect of transaction. Can I say effect of transaction will determine the income and expense or cash flow or distribution and contribution. Distribution to what? Shareholders? Correct. So effect of transaction and other event that changes the entity's economy, resource and claim. It means financial performance. Financial performance means what? Statement of PL. Internationally we call it comprehensive income. Correct. Therefore they have used the word comprehensive income. Comprehensive income is PL plus OCI. Comprehensive income is PL plus OCI. Understand why I have taken this chapter today? Because initially you were not knowing what is the meaning of comprehensive income, so I cannot start this chapter initially. Correct? Yes sir. So financial performance, comprehensive income, cash flows and changes not resulting from financial performance. Any changes not resulting from financial performance, can you give me some example? That is contribution and distribution, contribution from and distribution to owner. That is not a change from financial performance. That will change the equity, but not due to the change, not due to the effect of what? Financial performance. Yes sir. You can add on, this is nothing but statement of changes in equity. This is nothing but a statement of cash flow. This is nothing but a statement of comprehensive income. You know statement of comprehensive income, understood? In India we call it statement of profit and loss. Yes sir. Got it? Yes sir. Then topic number 3, qualitative characteristics of useful financial information. Qualitative. So there are two qualitative characteristics. One is relevance, and second is what? Faithful representation. Faithful representation. Can I say any information provided by financial statements should be relevant? Correct now. And it should faithfully represent all the information. Correct. Now, of course, this is, you know from Bachpan, relevance and faithful representation. Correct now. Let us read what they have given. So can I say if financial information is to be useful, it must be relevant and faithfully represent what it purport to represent. Means what it required to represent, that is only given. Correct now. Means the information provided by financial statements should be relevant and it must faithfully represent all the information. Yes sir. The usefulness of financial information is enhanced if it is comparable, verifiable, timely and understandable. Means can I say it will be relevant and it will faithfully represent only when if it is comparable with the financial statement of other entity. If the information can be verified, if the information can be verified with all the disclosures, correct now, or assumption taken. It should be timely, means we should give the timely information whenever required, and it should be understandable. It should be understandable. Relevance, of course, now if you want I can read. Correct, not required. If you want I can read. Correct now. So what they say about relevance? Relevant financial information is capable of making a difference in the decision made by users. Correct. Information may be capable of making a difference in a decision even if some users choose not to take advantage of it or are already aware of it from other sources. Correct now. Means it might happen, can I say them at management level, the information might be known to them. But can I say they do not disclose this information to the outsider. I hope you understand it. The information may be capable of making a difference in a decision even if some users choose not to take advantage of it or already aware of it from other sources. Correct? Yes sir. Financial information is capable of making a difference in decision if it has predictive value or confirmatory value or both. So sir, what is the meaning of predictive value? What is the meaning of confirmatory value? You know about predictive? Predictive. So what they say? Financial information has a predictive value. Predictive value if it can be used as an input. If the information can be used as an input. If the information can be used as an input to process employed by the user to predict the future outcome. So if whatever information has been given the financial statement that can be used to predict future outcome, then it means the information given by the financial statement has some predictive value. Some predictive value. Correct? Yes, sir. Means can I say information whatever has been given in the financial statement must have predictive value. Correct? What is the meaning of confirmative value? Financial information has confirmative value if it provides feedback about previous evaluation. Previous evaluation means whatever you have estimated previously, for that feedback is also provided by the information in current condition. Correct? So financial information has confirmative value if it provides feedback about means it confirm or changes previous evaluation. For example, we have estimated provision last year, so actual outcome will come in this year. So actual outcome will confirm the previous estimation. So if the actual outcome can confirm the previous estimation, means whatever information we have taken that has confirmatory value also. Confirmatory value also, understood? It means financial information is capable, what they want to say is capable of making a difference in decision. Is capable of making a difference decision if it has predictive, confirmatory value or both. Keywords. This is a keyword for relevance. Correct? Understood. This point you have understood. Materiality already I have defined. Where I have defined? Information become material if omitting, misstating or obscuring. You remember where I have defined it? Ind AS 1. Under Ind AS 1 we have done this same definition. So an information is material if omitting, misstating or obscuring. It could reasonably be expected to influence decision that the primary user of general purpose financial report make on the basis of those reports which provide financial information about a specific reporting entity. So already I have defined it. I am not going to discuss it much. You can add on refer what in day S1. Already I have done a detailed discussion on this. Correct? Refer in day S1. Right. So what is the faithful representation? Can you say to be perfectly faithfully represented means faithful representation? A depiction would have three characteristics. What are three characteristics for faithful representation? First is complete. Can you say information given in the financial statement should be complete? Should be complete. Then it should be neutral. Neutral means what? It should be without Buddha. It should be not based on the personal bias of management. Yes, sir. It should be neutral. Free from any error. It should be free from any error. Understood? I hope you understood this. Complete, neutral, free from error. You are doing from Bachpan. Means CA Foundation also we have done this qualitative characteristics. Correct? Yes, sir. You can read it. Enhancing qualitative characteristics. How can we enhance qualitative characteristics if it provides these features? First is comparability. Comparability. Second is verifiability. Correct? Then what? Timeliness and then understandability. Do you want me to read? Understood now. I think you have understood. Financial statement must provide comparable information. It should provide verifiable information which can be verified. It should provide the information based on particular time and understandability. Correct? Got it? Can you read by your own? Yes, sir. I hope this you can do. Correct? But you need to only from examination point of view. I don't know. They will ask what are the element for enhancing quality characteristics. This type of question will not be asked at CA final level. They will not ask direct theoretical question, but they may ask some case study based question. They may ask some case study based question. Understood? Correct. Then topic number 4, financial statement and the reporting entity. So what is the objective of financial statement? What is the objective of financial statement? Objective of financial statement is to provide financial information about reporting entity. Reporting entities, what? Reporting entities, asset, liability and equity. Reporting entities, asset, liability and equity, and income and expense. Means these are the five elements of financial statement. If somebody asks you what is the five elements of financial statement, it are what? Liability, asset, equity, income and expense. Correct? So can you see is to provide financial information about reporting entities, asset, liability, equity and income and expense that is useful to the user of financial statement in assessing the prospect for future net cash inflow to the reporting entity and management stewardship of the entity's economic resource. Means simple, in simple word I can see the objective of financial statement is to provide financial information about five elements of financial statement to the user of financial statement. Got it? To the user of financial statement to provide financial information about asset, liability, equity, income and expense to the user of financial statement by giving a statement of financial position and a statement of what? Profit and loss. Correct? And also a statement of cash flow. Got it? Such financial information is provided in the balance sheet by recognizing asset, liability and equity. Correct? In the statement of profit and loss by recognizing income and expense. Low. Do you want my help to explain this? Correct now. Mean this when I teach CA foundation student. Normally I don't teach, but when I start with this only in CA foundation. Correct now. And in other statement note, other statement means it can be statement of cash flow, it can be statement of changes in equity, it can be notes to account. Correct. By presenting and disclosing the information about recognize asset, liability, equity, income and expense. Recognize asset, liability, equity, income and expense, including information about their nature and about the risk arising from those recognized assets and liabilities. Means disclosure required. Correct. Assets and liability that have not been recognized. So there may be some assets and liability which are not recognized. For example, contingent liability, contingent asset, for which also information is required to be disclosed. Correct. Including information about their nature and about the risk arising from them. Cash flow, contribution from holder of equity claim and distribution to them. Correct? Means can I say these are given in notes. This for this we prepare statement of cash flow and for this we prepare statement of changes in equity. Got it? Yes sir. What do you want? Should I continue? Or can you read by your own? You only say? No sir, please read now. Correct? And of course, we need to also disclose the method, assumption, and judgment. If you remember, Ind AS 1 also require the disclosure about the method, assumption taken for the preparation and presentation of financial statement. So, method, assumption, judgment used in estimating the amount presented or disclosed and changes in those method, assumption, and judgment. Understood. So, this will be also disclosed where? In notes to account. Objective we understood. Correct. Now, can you see we are preparing financial statement for a reporting period? For a reporting period. What is the meaning of reporting period? Reporting period. Can I say financial statement are prepared for a specific period of time and to help you user of financial statement to identify and assess changes and trend. Changes and trend. Financial statement also provide comparative information for at least one preceding reporting period. Correct. Means information about possible future transaction and other possible future event is included in the financial statement if it correct. So can I say this specific period of time is what reporting period means. What will be the reporting period? It will consist of how many months, that is not given. Means we all know that reporting period can be equal to more than or less than 12 months. Means a 6 month can be also considered as reporting period if the management want to prepare financial statement for 6 months, every 6 months. I hope you are understanding. So this should be a specific period of time which will be defined by the management only. But normally in India, as per Companies Act, it will be what, one financial year, which will end on what, 31st March. So from Companies Act point of view, it will be one financial year, correct? So a specific period of time will be one financial year from Companies Act point of view, correct? So financial statement are prepared for a specific period of time, that is a reporting period, and to help user of financial statement to identify and assess the changes and trend, correct? Financial statement also provide comparative information for at least one preceding reporting period. Now, as per India's, we know that minimum comparative financial information need to be given. But can I say we can give some additional financial statement also for comparison? So at least we need to provide comparative figure for one preceding period. Then this point is also important. Information about possible future transaction and other possible future event is included in the financial statement if it relate to the entity's assets or liability, including unrecognized asset or liabilities or equity that is existed at the end of reporting period or during the reporting period, or to income and expense for the reporting period. Means it relate to any possible future transaction or possible future event will be also included in the financial statement if it relate to the entity's assets or liability. We have done India's 10 event occurring after reporting period. If it provide condition existing on reporting period should be adjusted, correct now. And if it does not provide any evidence of the condition existing on the reporting period, then disclosure should be given. That only they want to say that information about future transaction and other future possible events should be also included in the financial statement if it relate to entities asset liability and is useful to the user of financial statement. Got it? Any doubt? No doubt. Going concern assumption. You want me to read? Let us read, because if I will not read, you can file a case against me. Correct? Financial statements are normally prepared on the assumption that reporting entity is a going concern. Correct? And will continue in operation in the foreseeable future, and hence it is assumed that entity has neither the intention nor need to enter liquidation or to cease trading. However, we know that if financial statements are not prepared on non-going concern, if financial statements are not prepared on going concern basis, fact need to be disclosed. Correct? That is given. If such an intention or need exists, the financial statement may have to be prepared on a different basis. We have done under India's 1 as well as India's 10. Correct? If so, financial statement describe the basis used. Means what will be the basis of preparing financial statement when the entity is not a going concern, that need to be also disclosed. Already we have covered under India's 1 and India's 10. Yes, sir. Reporting entity. So who are reporting entity? Reporting entity is an entity that is required or choose to prepare financial statement. Correct? A reporting entity. They have not said entity, reporting entity. So a reporting entity who is required to prepare financial statement. Any entity who is preparing financial statement will be the reporting entity. A reporting entity can be a single entity, or a portion of entity, a portion of an entity, or can comprise more than one entity, Means we can also prepare financial statement for a portion of the entity, correct? Means can I say, if I am saying parent and subsidiary, they together become one entity. So one subsidiary can be a portion of what? Group entity. A subsidiary company can be a portion of group entity. I hope you are understanding. Correct? So a reporting entity can be a single entity, or a portion of an entity or can comprise of more than one entity. Now, what they are saying, a reporting entity is not necessarily a legal entity. Means entity may be legal or may not be a legal entity in the eyes of law. In the eyes of law. Understood? Means when I am saying group entity is a reporting entity, but it is not a legal entity from the eyes of Companies Act. Correct now? A group entity is not a single entity in the eyes of law now. That comprise of many legal entities. Correct? Yes, sir. So if a reporting entity comprise both parent and its subsidiaries, reporting entities financial statement are referred as consolidated financial statement. I hope this also you have understood. No explanation required. Means for a group entity, the financial statement will be known as consolidated financial statement. If a reporting entity is only a parent entity, means it is only a parent entity, then reporting entities financial statement are referred as what? Are referred as what? As per this conceptual framework, it is unconsolidated financial statement. However, it is nothing but separate financial statement. Separate financial statement, so you can also write down this is nothing but separate financial statement as per Ind AS 27. As per Ind AS 27. Now you only say if a parent company is preparing their financial statement, it will be known as unconsolidated financial statement or separate financial statement. Separate financial statement. Why? Because we cannot override the requirement of Ind AS. So Ind AS 27 says separate financial statement, so it will be separate financial statement. We cannot call it what? Unconsolidated financial statement. But we understood it is nothing but unconsolidated only. Correct. If a reporting entity comprises two or more entity that are not all linked by a parent subsidiary relationship, means there is no parent subsidiary relationship. Understood? So if a reporting entity comprises two or more entities that are not all linked by parent subsidiary relationship, the reporting entity's financial statement are referred as combined financial statement. Combined financial statement. Combined financial statement means if a reporting entity comprises two or more entities but they are not parent and subsidiary, means it can be investor and associate. It can be investor and associate. Right now we have not done that. Means it can be parent and subsidiary, it can be investor and associate, it can be joint venturer and joint venture. Because you all know, you till now we have not started consolidated financial statement, you might be finding it difficult. So difficulty understanding this. So when I am saying consolidated financial statement, this become consolidated financial statement. The question is that when we combine the financial statement of investor and associate, what it will be known? As per Ind AS, it is known as consolidated financial statement only. As per Ind AS. As per Ind AS 28 coming soon in your life. But as per this, they are saying combined financial statement. Chalega, okay? Correct now. So if a reporting entity comprises two or more entities that are not all linked by parent subsidiary relationship, their reporting entities means the reporting entities financial statement in that case will be referred as what? Combined financial statement. But as per Ind AS 28, it is known as what? Consolidated financial statement only. Why? We'll understand. Nevertheless, parent may be required or choose to prepare unconsolidated financial statement in addition to consolidated financial statement. However, we know that as per Companies Act requirement, a parent company need to prepare both separate financial statement and consolidated financial statement. Understood? So what they are saying, if there is a parent company, so they need to prepare unconsolidated as well as consolidated financial statement. But unconsolidated financial statement is prepared in addition to what? Consolidated financial statement. Means as per this conceptual framework and as per Ind AS both, which is mandatory? Which is consolidated or unconsolidated? Consolidated financial statement is mandatory and unconsolidated financial statement is prepared in addition to what? Consolidated financial statement. Got it? Yes, sir. Done. This also done. Now topic number 5, elements of financial statement. This become important from examination point of view. Elements. What are the 5 elements? Asset, liability, equity, income and expense. So asset, liability, equity related to financial position, related to reporting entities financial position, and income and expense related to reporting entities financial performance. Now we need to understand what is the meaning of asset, liability, equity, income and expense. These all things we should do at CA foundation level. What is the meaning of asset? What is the meaning of liability? Correct. However, with our previous classes, we have done the meaning of asset, liability, equity, correct, income, expense. Everything I have defined somewhere. Everything I have defined somewhere, but not together. Wherever required, I have given the definition. Correct now. So let us understand information provided by general purpose financial report, elements of financial statement, definition or description. Correct. First we'll do the definition, then we'll do the explanation of that definition. Chalega? So information provided by general economic resource information. Can I say it will be represented by asset? Any economic resource of a reporting entity is represented by asset. What is the meaning of asset? A present economic resource. A present economic resource. Correct. Controlled by the entity. A present economic resource controlled by the entity as a result of past event. As a result of past event. Can you repeat with me? A present economic resource controlled by an entity as a result of past event is a asset. So this present economic resource which is controlled, this present economic resource if controlled by the entity will become an asset. Will become a asset. Correct? Understood. So what is the meaning of economic resource? What is the meaning of economic resource? Now one doubt will come, so what is economic resource? So economic resource is a right. Is a right. This right word is very important. I hope with the financial instrument chapter you have understood the value of the meaning, means you have understood the importance of the meaning of right. In financial instrument chapter we have done financial asset is a contractual right. Contractual right. So economic resource is a right. Correct. So economic resource is a right that has potential to produce economic benefit. That has potential to produce economic benefit. That has potential to produce economic benefit. We'll do the explanation of this definition once again, don't worry. But I hope you have understood the meaning of asset. Can you repeat with me the meaning of asset? Asset means a present. The first word is present economic resource controlled by entity as a result of past event. Now, will you forget this definition? In interview, they will ask, what is the meaning of asset? You will say building, plant and machinery. अरे बोलना रे. They will ask what is the meaning, what is asset? What do you say? A present economic resource controlled by the entity as a result of past event. So what is the meaning of economic resource? They can throw another question. The economic resource is a right that has the potential to produce, yet to provide economic benefit. So what is the meaning of claims? Means information provided by general purpose financial report is second information claim. So claim can be in terms of liability or equity. Equity is also claim. Correct? So liability, what is the meaning of liability? It is a present obligation. Present obligation, remember? Present obligation, Ind AS 37. It is a present obligation of the entity to transfer. Present obligation of an entity to transfer an economic resource as a result of past event. So present obligation of an entity to transfer economic resource as a result of past event. To transfer economic resource. To transfer economic resource. I hope you have understood. So asset means present economic resource. Liability means present obligation to transfer economic resource. One second. Asset means present economic resource. Liability means present obligation to transfer economic resource. Got it? Yes, sir. What is the meaning of equity? Equity we have done taja where? In days 32. Correct? What? The residual interest in the asset of the entity after deducting all liability. That only we have done. The residual interest in the asset of the entity after deducting all its the liability. That become what? Equity. However, can I say for this detailed discussion already we have done under Ind AS 32? Detailed discussion we have done there. Correct? Equally detailed discussion we have done. Yes, sir. Then information provided may be changes in economy resource and claim reflecting financial performance. So it will be income and expense. Income and expense. So what is income? What is expense? Can you say income means increase in asset? Increase in asset or decrease in liability? Any increase in asset or decrease in liability that changes, yeah, that result in increase in equity. So income will increase equity. Means there are dual concept now. Dual aspect concept. So increase in income means what? Increase in asset. So whenever asset is increasing, what will happen? Your equity will increase. Correct. Or decrease in liability. There can be decrease in liability. So decrease in liability that result in increase in equity. Decrease in liability is also what? Gain. So that will increase your profit. Increase your profit means what? It will increase your retained earning. Understood? Yes, sir. Other than those relating to contribution from holder of equity claims. Other than contribution from the holder of equity, correct? Means any contribution means cash received, means increase in asset and increase in equity. Understood? Means if you are receiving contribution from owner, what is the journal entry you are doing? Cash account debit to capital. So increase in asset and increase in equity. Well, this is not income. This is not income, even though it is an increase in asset which correspondingly increase the equity, but this is not a income. So they have excluded from a definition of income any contribution from equity holder. Understood? Yes, sir. So income means increase in asset or decrease in liability that result in increase in equity other than those relating to contribution from the holder of equity claims. Expense reverse definition. Expense means what? Decrease in asset or increase in liability that result in decrease in equity other than relating to distribution to the holder of equity claim. Distribution means dividend. Correct now. Dividend distribution is not a expense. It will not be transferred to PL. It will be transferred to retained earning. Means in Bachpan, believe me, when I was in class 11, 12, that time also we have done dividend. I think in 11, 12 we have not done. Na? 11, 12 we have done dividend. Company chapter. Chalo, you have not done, I have done. Correct. Or it might be in CA Foundation. CA Foundation dividend and our teacher used to say dividend will be transferred to PL appropriation account. And interest will be transferred to PL. Lot of confusion. Why? Why? Dividend will be transferred to PL appropriation account and interest will be transferred to what? PL. Lot of doubt was there. And most of the students used to do mistake. Dividend also they will say what? PL only, Baba. But now I hope you have understood. Interest is an expense. Dividend to equity shareholders is not an expense. Is not an expense. Understood? Have you understood? Yes, sir. I hope the meaning you have understood asset, liability, equity, income and expense. Means when we have done grant. Now you only say grant is an income or is not an income. Nalayak. We have done entire Ind AS 20 and you are saying grant is not an income. Grant we have transferred to PL only. Whether grant was transferred to equity, grant was transferred to what? PL. Why? Because it will meet the definition of income. Let us understand. Grant means increase in asset. Either it will be monetary asset or non-monetary asset, either in cash or in kind. Increase in asset, बोलना रे. Or decrease in liability, waiver of loan. We have done waiver of loan na. In Ind AS 20 we have done waiver of loan also. So either increase in asset or decrease in liability, that result in increase in equity only, and that is not related to contribution from equity holder, because grant is from government, not from equity holder, and therefore it will meet the definition of income, and therefore India's 20 says each and every grant will be transferred to PL, it will not be transferred to retained earning. Got it? Got it? Are bolna rahe? Yes sir, correct. Now definition of asset, now analysis of definition. Whatever we have done, we have understood, but more explanation. You have understood the meaning of asset. Can you repeat with me without saying? Asset is a present economic resource controlled by entity as a result of past event. What is the meaning of economic resource? Economic resource is a right that have potential to provide economic benefit. No, I stop, you also stop. Why you stop? Because just write this chapter I am also doing for the first time. I and you are same. I and you are same. And this definition I am also doing for the first time. Previously we don't used to give this definition. Correct now? I hope you are understanding. So for this chapter I and you are same. But when I read now, I break all the points and try to concentrate. Means believe me, this chapter for the first time I read last day only. Because today I need to teach. So for the first time I read last day I came to the class. Believe me, this fact I am saying. But due to my past experience, I have the ability to teach in class. Correct now? So what I am saying, can you repeat with me please? Because the definition is very important. What they are saying, an asset is a present economy resource controlled by the entity as a result of past event. Economy resource is a right that has a potential to provide or produce economic benefit. Now the question is, sir, what is this right? What is this right? Correct? Right means what? So what they say, right have the potential to produce economic benefit that can be in two forms. That can be in how many forms? Two forms. Take many forms means normally two forms. Right that correspond to an obligation of another party. Right that correspond to an obligation of another party means my right become your obligation. Means if I write to receive cash, you have an obligation to pay cash. So right which correspond to an obligation of another party. Correct. Second, right that do not correspond. Don't read till I read. Because once you read before me, entire interest gone. Because I'll be asking some question now. Right they do not correspond to an obligation of another party. Can you give me any right which do not correspond to an obligation of another party? Huh? Bolo? Huh? ROU asset. Very good. Or simple right to use property, plant and equipment. Means when I purchase a property, plant and equipment, I can use it because it is under my control, but it does not correspond to any obligation of other party. Understood? I hope you have understood. So right that have a potential to produce economic benefit may come in many forms. One of the form is what? Right that correspond to an obligation of another party. For example, right to receive cash, right to receive cash, right to receive goods or services. My question to you, right to receive cash will be a financial asset. It is not a financial asset. Right to receive goods and services is a financial asset. It is not a financial asset. Huh? So confused, na? Right to receive cash is a financial asset as per India 32, and right to receive goods or services is not a financial asset. So right now we are doing the meaning of asset, not the meaning of financial asset. Understood? Asset can be financial or not a financial asset. Understood? So means before starting financial asset, we should do the meaning of asset. Correct now, but I have not done because that time you were not knowing many terms. Now it is very easy to explain this. It is very easy to explain this now. Yes, sir. So right that correspond to an obligation of other party, for example, right to receive cash, right to receive goods or services, right to exchange economic resource with another entity on favorable terms. Remember, right to There is a contractual right to exchange financial asset or financial liability with another entity under conditions which are favorable to the entity. Derivative instrument means right to exchange economic resource with another party on favorable terms, means this will become a derivative asset. Derivative asset, correct? Yes. Right to benefit from an obligation of another party. Right to benefit from an obligation of another party to transfer an economic resource if a specific uncertain future event occur. Oh my god. Have you understood this point? Right to benefit from an obligation of another party to transfer an economic resource if specified uncertain future event occur. We have done one means this point we have done in what? Compound financial instrument. Optionally convertible debenture. Option contingent depends upon future outcome whether the debenture holder will opt for redemption or conversion. Correct now. So right now it is what? If a specified uncertain future event occur. So can you say if they opt means if debenture holder opt for what? Redemption. So they have a right to receive economy resource. Correct now. So if debenture holder opted for redemption, so they have a right or not? They have a right. They have a right to benefit from an obligation of another party because that time it will become an obligation of another party, and therefore under Ind AS 32 we have said that if it is dependent on an event which is contingent, it will be initially classified as what? Financial liability, if you remember. Correct? Yes, sir. So right to benefit from an obligation of another party to transfer an economic resource if specified uncertain future event occur. Got it? Understood? If you want to write down this is nothing but financial asset. This is not a financial asset. FA means what? Fixed asset. Now we don't use the term fixed asset. Fixed asset, the word has been deleted from our life. We don't use fixed asset in our life now. Deleted. Even though in CA Inter it is not used. In CA Inter you have used fixed asset. In balance sheet you have used fixed asset. That is gone. Huh? No, it is not fixed asset. Fixed asset, this is not a financial asset. You can add this is nothing but derivative asset. You can add on, for example, add on optionally convertible debenture. Optionally convertible debenture. Correct. Right, they do not correspond to an obligation of another party. Very simple example. Right over physical object such as PP or inventories. Right to use intellectual property. Right to use intellectual property. Yes, sir. ROU asset will be also one example. You have given the best example only. ROU asset. Got it? Yes, sir. Now, what was the meaning? An economy resource is a right. Right, you have understood. There are two types of right that has a potential to provide economic benefit. Now, what is the meaning of potential to provide? What is the meaning of potential to provide? The potential to produce economic benefit. Potential to produce. So, how we'll understand it has a potential to produce economic benefit. So, economy resource is right that has a potential to produce economic benefit. A right meet the definition of an economic resource. A right meet the definition of an economic resource and hence can be an asset correct, even if the probability that it will produce economic benefit is low. Understood? Means the point is that if the probability that it will produce economic benefit is low, for example in case of contingent asset, in case of contingent asset we have done that if inflow is virtually certain it will be recognized as an asset. If inflow is not virtually certain but it is what? Probable, then it is not an asset, it is a contingent asset. Correct? Means what they want to say, a right can meet a definition of economic resource and hence it will be an asset even if the probability that will produce economic benefit is low. Understood? However, now the second para. This can be understood with second para. However, low probability might affect decision about. Low probability might affect decision about. Means if there is a low probability to produce economic benefit, then it will affect decision about what information to provide about that asset, how to provide that information, and whether the asset to be recognized or not to be recognized. Means right now this conceptual framework is not discussing about recognition, whether we should recognize or whether we should not recognize. That will be based on what? In day 37 we have done that contingent asset will not be recognized. But what they are saying in right can meet the definition of economic resource and hence can be an asset if the probability to produce economic benefit is low. However, low probability to produce economic benefit may affect the decision about what information to be given, how to provide that information, and their recognition. Understood this point? Have you understood this point? I hope you are understanding. Initially, believe me, this chapter I would have taken in the first day, you would have died. You would have died, na? Correct, na? Now you are at comfort stage. Yes, sir, we are understanding. Why you are teaching? We can do by our own. Correct. Control. Now, control means we have understood an economic resource, right, we have understood. That has a potential to produce economic benefit, we have understood. But an asset is a present economic resource controlled. What is the meaning of control? Means there are three words: right, potential to produce economic benefit, and control. So control means what? An entity controls an economic resource if it has present ability to direct the use of economic resource. Present ability to direct the use of economic resource. Present ability means they have a ability to use the resource. Can you say either they can use it or they can allow other person to use it? Either they can use it in their own activity or they will allow other person to use in their activities. Correct now? So they have a present ability to direct the use of economic resource. That is, it has the right to deploy the economic resource in its activity, in their own activity, or to allow another party to deploy the economic resource in that another party's activities. Got it? So can you say control means if it has present ability to direct the use of economic resource and means both the conditions need to be satisfied and obtain economic benefit that may flow from it. After using it, they must derive economic benefit now. Understood now? If you are using it, but if you are not deriving economic benefit, so what is the use? Correct? An entity control an economic resource if it has present ability to direct the use of economic resource and obtain economic benefit that may flow from it. That may flow from it. Understood? And because of this reason now, any leased asset will become an ROU asset. Even though it is under operating lease as per inter-level. Means now there is no operating lease. Means if I have taken this calculator from you, suppose this is not my calculator, this is your calculator, I have taken for 5 days. So for 5 days it become what? ROU asset. Because for 5 days I can derive economic benefit. Bola re, for 5 days I am deriving economic benefit now. I can use it and I can obtain all the economic benefit from this asset. Therefore it will become my ROU asset. Right of use asset. Got it? Yes sir. Control you understood? This all asset definition you have understood. Now we become perfect in the definition of asset. Chalega. What is the meaning of liability? Liability will not take much time. Liability means, can you repeat? A liability is a possible obligation. Oh, sorry. It is a present obligation. What is possible obligation? What is possible obligation? I've asked. Contingent liability may be present as well as possible. You forgot. Contingent liability may be present obligation as well as possible obligation. You can't say possible obligation will be always contingent liability. Present obligation will be always liability. That is wrong. Present obligation can be also what? Contingent liability. If outflow of resource is not probable or reliable estimation cannot be made. Remember, do some revision. Maja aayega, nalayak. Correct. Coming in the class without revision. Yes, sir. Definition of a liability. A liability is a present obligation of the entity to transfer economic resource as a result of past event. So liability, can you repeat with me? Liability is a present obligation of an entity to transfer economic resource as a result of past event. For a liability to exist, the three criteria must also three criteria must all be satisfied. Means all the three criteria must be satisfied. First, entity must have an obligation. Entity must have an obligation. The obligation is transfer what? Economic resource. The obligation should be to transfer economic resource. And the obligation is present obligation that exists as a result of past event. These are the three conditions. First, there must be what? Obligation. Obligation means what? Duty or responsibility. Obligation, whenever we use this word, means what? Duty or responsibility. Means right now under the contract I have an obligation to provide services. An obligation to provide services. Correct na? Yes, sir. When obligation is duty or responsibility that an entity has no practical ability to avoid. Can I avoid teaching you? No, 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 no. I can, but you will file a case against me in consumer forum. You have some student forum. You know, in CA only, I have seen there is no student union. There is no, in every college there will be some union. In every college, in every course. Correct now. There will be some union of students. Even though there might be some regional union, but they will not work on the welfare of the student. They will work only on their welfare. Yes, there is some student union. There may be some group of students who are working for the development of what? Student only, but they don't think about this what? Exploitation of the articles. Can you say as a student we are exploited in Article 6? I should not say in this class, Baba. So somebody will file a case against me only because I am a member of IC. I should not do that. But just try to understand. I feel that there should be a strict regulation for Article 6. Then only we can become chartered accountant in due time. Correct now. There's so much exploitation, so much, very much exploitation. I am totally against that. I'm totally against that. I was also exploited. Now, stipend is not at all important. Stipend don't give only. We don't want stipend because we want knowledge. I don't think about increasing stipend. Stipend let it be there, but give us proper. It should be what? Some hours limit. They should not exploit us. They should not give the work which is not required to be done by articles. Bring tea, photocopy. You have done photocopy? Means initial first year we have done photocopy only. Why? We have not came for that now. Chalo, theek hai. That is exploitation. Stipend I will not say. Don't give a stipend. We don't want also. We don't want. Then it's just we don't want. But we can become CA if they are giving 15,000 to us, but they are not giving time. Will you become CA? That will be more painful. So don't think about stipend. I will say stipend they are giving for learning, not for working. So whatever stipend you are getting, even though you are getting 1,000, you should be thank you very much. You have given me stipend for learning, not for working. We are not working there. We are learning there. Try to understand. You want stipend means that it will not be a stipend. Then it will be a salary. You are not an employee. You are a trainee. There's a difference between trainee and employee. But they are exploiting us more than what? Employee. So if you demand, then they will exploit. We don't demand, don't give. We don't require stipend. We want knowledge, but at a given proper time. There should be proper time. 6 hours means 6 hours, not more than that. Believe me, in the third year of articleship, I have understood this fact. First year, second year, I was also exploited. Third year articleship, I have understood. I said my principal, you want me to remain as an article, I will come only for 6 hours. Is it okay? Bola okay. Because I want to become CNRA. I will not work under you. The time will come, you will work under me. Just try to understand. I have not said like that to my principal, but I was thinking like that. What I want to say, just try to understand. Be, you should have such means have such intention in your mind that you are working at that 6 hour. You work in such a way that he will be happy. So whatever time you have got for working, work in such a way that he will become happy. So I used to work 6 hours effectively, but not more than 6 hours because I need to become CA also, Baba. Correct. But in third year articles, if that I have understood, not in first year, second year. Got it? What I am saying. So that much you should also understand. What I want to say. Leave it. Entity has an obligation. How I came to that topic? Because of you, Nalayak. Now, entity has an obligation. An obligation is duty or responsibility that an entity has no practical ability to avoid. Then it become an obligation. Means if I can avoid teaching you, then it is not an obligation. Then it is not an obligation. Correct? Yes. The obligation is transfer an economic resource. Correct? The obligation must have potential to require the entity to transfer an economic resource to another entity. Correct? An obligation can meet the definition of a liability. An obligation can become liability even if the probability of transfer of economic resource is low. Even if the probability of transfer of economic resource is low, means any obligation can meet the definition of liability even if the probability to transfer the economic resource is low. However, low probability might affect the decision about what information to be provided, how to provide that information, and whether the liability is recognized, and if recognized, how it is to be measured. Can I say this all discussed where under India's 37? Already we have discussed about this under India's 37. Correct. So an obligation can meet the definition of liability even if the probability to transfer an economic resource is low. They are saying it can meet the definition of what? Liability. But as per India's 37, if there is no present obligation or outflow of resource is not probable, it is not a liability. It is not a liability. Understood? Correct? Are you getting whatever I am saying? Yes, sir. Means can I say India's 37 was prepared based on this conceptual framework? India's 37 was prepared based on this conceptual framework. That I want to say. This conceptual framework is not prepared based on India's 37. India's 37 has been prepared based on this conceptual framework. Got it? Yes, sir. But once India's 37 is developed, now this conceptual framework cannot override a requirement of India's 37. This point you are understanding? Yes, sir, we understand. Correct. Then obligation is a present obligation that exists as a result of past event. This is very simple. A present obligation exists as a result of past event only if the entity has already obtained economic benefit or taken an action. Entity has obtained economic benefit. Suppose I receive cash from you, fees from you. I have already received economic benefit from you. Now I have an obligation to provide what? Services. Correct? Yes, sir. Entity has already obtained economic benefit or taken an action, and as a consequences, the entity will or may have to transfer an economic resource that it would not otherwise have had to transfer. Because they have received such economic benefit, because of that point, in consequence, the entity will or have to transfer an economy resource that they would have not transferred if they would have not received what? Economy resource. Understood? Correct. So then it become a present obligation. Then it become a present obligation. Got it. So from examination point of view, if I say a liability will exist if three criteria will be satisfied. First, there must be an obligation. Second, the obligation is to transfer an economic resource. Third, the obligation is a present obligation that exists as a result of past event. Got it? Correct. Then definition of equity, I have already said equity definition we have done in detail under India 32. However, we can read it. Equity claims are claim on residual interest of the asset of the entity after deducting all liabilities. In other words, they are claim against entities. They are claim against the entity that do not meet the definition of liability. Means any claim which are not liability will become what? Equity. Any claim which are not liability will become equity. Got it? Yes, sir. Definition of income and expense already I have explained. You can read it. The same definition is given. Explanation is not required for definition of income. However, when I say income, income will include gain also. Whenever I say expense, expense will include loss also. Correct? So income include gain, write down somewhere, and expense include loss. Sometime if I say sir expense, so what is the meaning of loss? Expense will include loss. Got it? Yes, sir. Now, recognition and derecognition. Now, the point is that when to recognize, when to derecognize. When to recognize. So, what is the meaning of recognition? We have used the word recognition, 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 but what is the meaning of recognition? For the first time, we have understood the definition of recognition with this conceptual framework. Means they have defined recognition process also. Recognition is the process of capturing for inclusion. Recognition is the process of capturing for inclusion. Where? In the balance sheet or in the statement of PL. In the balance sheet or in the statement of PL. Means not in statement of cash flow. Recognition is the process of capturing for inclusion in the balance sheet or in the statement of PL an item. Item means asset, liability, equity, income and expense. An item that meet the definition of one of the elements of financial statement, that is asset, liability, equity, income and expense. Correct? This is the meaning of recognition process. So recognition is the process of capturing for inclusion in the balance sheet or in SOPL an item that will meet the definition of what? An elements of financial statement, that is asset, liability, equity, income and expense. Chalega? Yes, sir. Got it. Now, the amount at which asset, liability, equity is recognized in the balance sheet. The amount at which asset, liability, equity is recognized in the balance sheet is known as what? Is carrying amount. Okay, recognition can be done either initial or subsequent. So initial, whatever we are recognizing, that will be also carrying amount. Subsequent, whatever we are doing, that will be also carrying amount. Means when I am saying recognition, it can be initial recognition, it can be subsequent recognition. Correct now? I hope you are understanding. But at the amount at which we are doing recognition, whether initial or subsequent, that amount will be known as what? Carrying amount. It's carrying amount. Carrying amount, why? Because at that amount it is carried in balance sheet. At that amount it is carried in balance sheet. Similarly, the balance sheet and SOPL are linked. The balance sheet and SOPL are linked because the recognition of one item requires the recognition or derecognition of one or more items. The principle can be explained in the form of journal entry. Alright, this is nothing but rules. Rules of journal entry. We are doing the rules of journal entry. Achha, you have done golden rules. Golden rules is what? I have explained something about golden rules in my class. Achha. Golden rules, what are the golden rules accounts? Personal account, then impersonal account. Impersonal account can be real account and nominal account. Now you know what is real account. Huh? Real account means what? I have said in class, okay. Real account means what? All asset except receivable. Receivable are asset but not real. Receivable will be what? Personal. Oh my god. Sure. Why I am teaching? You know about the rules. You know about the rules. Personal debit the, credit the, real account debit what? Credit what? Nominal all, debit all, credit all, income. These rules you know. Okay. My question to you all, I'm just asking a simple question. Have you done the journal entry of bad debt? What is journal entry of bad debt? Bad debt to debtor. By applying which rules? Can you apply and can prove this journal entry? Prove it. Bad debt. All expense will be debited. Proved. Debtor. Personal account. Debtor is a personal account. Why it is creditor? No, no. Prove with the rules. You are saying your own rules. Nothing is receivable. Debit the receiver, credit the giver. What debtor is giving right now? अरे बोलना रे बोल. Can you say we can't apply which rules? Golden rules, bakwas rules. At CA foundation level, I only say this is bakwas. I am teaching you because that is a requirement to teach at CA foundation level. Otherwise, I will never take golden rules in accounting subject. This is totally because, and because of these golden rules, accounts become difficult. Because of these golden rules, accounts become difficult. There is no rules. This is ratification you have done bad debt to debtor. You have not applied the rules. Your teacher has given journal entry. मजा आ रहा है बस. मजा आ रहा है ना. अरे बोलना रे. Are you able to understand whatever I am saying? Just try to understand. This cannot be done with golden rules. Therefore, we as a CA student, we should not use golden rules. We should use modern rules. Have you done modern rules in CA foundation? How many of you have not done? All have done. Saying lie. You all are saying lie. How many of you done modern rules? Modern rules? Not done na? Only golden rules na? And if you read ICA study material, they have given more emphasis in modern rules. Means we don't touch only. We don't touch. Correct na? And this entire rules is based on what? Modern rules. Modern rules is very simple for asset and expense. Increase will be what? Decrease will be what? Credit. For liability, equity and income, increase will be what? Decrease will be what? Debited. And this is the best rules. You can now say bad debt. Increase in expense will be debited. Debtor, decrease in asset will be credited. So with this modern rules, all journal entry can be done. And that only they have given. What they want to see, the balance sheet and statement of PL are linked. Because increase in asset will be increase in income. Understood? Increase in asset will be increase in income. So balance sheet and SOP are linked. Are linked now. For because the recognition of one item require the recognition or derecognition of one or more items. How? Recognition of income. When you recognize income, means increase in income, credited. So in a statement of PL, credit income, the corresponding effect will be what? In balance sheet, either by way of what? Either by way of what? Increase in asset, means debit asset, or decrease in liability, means debit liability. This is nothing but what? Modern rules. This is nothing but modern rules. Means our conceptual framework has also given what? Which rules? Modern rules. You know why at entry, when I say CA foundation, this is entry level. And at entry level, I have seen that the students are taught by non-chartered accountant. Normally at CA foundation level, I have seen the teacher are not a chartered accountant. And any teacher who are not chartered accountant, they don't have this knowledge. They will teach as per what? Any reference book. And all reference book are bakwas. Understood what I am saying? And if you have done your coaching from a non-chartered accountant who does not give this type of knowledge to you, CA foundation will pass. Difficulty will arise at CA inter and CA final. CA foundation you will pass. CA inter also you may pass. But difficulty arises where? At CA final. Because CA foundation, I have seen students are totally ratta with this. If you have someday time, so I have some what? I have uploaded some video on foundation concept. Understood? Foundation concept. There are 50 to 60 concepts. Just go through one or two concepts. You will understand the level of my teaching at CA foundation level. If you have time. And I think I have already forwarded that link by the name of accounting fundas in the email. So if you have some time, then only refer. Otherwise, don't refer. Correct? But you will understand what level should be given at foundation level. At foundation level, if you know this thing, then CA inter and CA final will be very easy. Correct? But now I hope it is understood. At CA final level, no explanation required. So what journal entry you will do? Asset account debit or liability account debit to what? Income. This will be what? Balance sheet. This will be what? PL. Similarly, for recognition of expense, what journal entry? Expense account will be debited to decrease in asset or to increase in liability. This will go to what? Balance sheet. This will go to what? PL. Understood? This is nothing but modern rules. So when I am saying debit asset, either it will be initial recognition of asset. When I am saying debit asset, either it will be initial recognition of asset or increase in its carrying amount. Either it is initial recognition or increase in carrying amount. When I am saying debit liability, either it will be de-recognition of liability or decrease in its carrying amount. Either entire liability will be de-recognized or decrease in its carrying amount. Some part has been de-recognized, a portion has been de-recognized. Understood? Yes, sir. I hope understood. Correct. Yes, sir. Recognition criteria. Recognition criteria. When to recognize? When to recognize? Can you say already we have done under Ind AS for PP recognition criteria, for investment property recognition criteria, for intangible asset recognition criteria, for provision recognition criteria, for biological asset recognition criteria. Already we have done inventory recognition criteria. Already we have done. But they have given overall rules for recognition criteria for all asset, liability, income and expense. Correct? Yes, sir. So only item that meet the definition of an asset, liability or equity are recognized in balance sheet. It means if it is not meeting the definition, it will not be recognized. Similarly, only item that meet the definition of income and expense will be recognized in the statement of PL. Understood? Yes, sir. However, not all item that meet the definition of one of those elements are recognized. Not all items that meet the definition of one of those elements are recognized. Even though it meet the definition, it might happen it is not recognized because of low probability. Because of low probability. Correct now? Yes, sir. So not all items that meet the definition of one of those elements are recognized. And asset liability is recognized only if recognition provide user of financial statement with information that is useful, with relevant information and faithful representation. Means simple word, it will be recognized only when it provides relevant and relevant information and faithful representation of what assets and liabilities. Correct? Relevance. These all are theoretical. I am just reading, going through. Relevance. Recognition of particular asset or liability and any resulting income, expense or changes in equity may not always provide relevant information. If, for example, What they are saying? Recognition of a particular asset or liability and any resulting income or expense or changes in equity. Whenever there is an income and expense, it will change equity also. Correct? May not always provide relevant information if, for example, it is uncertain whether asset or liability exists. It is uncertain whether asset or liability exists, or asset or liability exists but the probability of an inflow or outflow of economic benefit is low. Understood? Means in this case it will not be recognized. Understood? So recognition of particular asset or liability may not always provide relevant information if it is uncertain whether an asset or liability exists, or an asset or liability exists but the probability of inflow outflow of economic benefit is low. Already we have done under India 37 about contingent liability and contingent asset. This is nothing but refer India 37. Got it? Correct? Faithful representation. Recognition of particular asset liability is appropriate. Recognition of asset liability is appropriate if it provides relevant information, not only relevant information, but also a faithful representation of that asset or liability and any resulting income, expense, or changes in equity. Correct? Whether a faithful representation can be provided may be affected by the level of measurement uncertainty associated with the asset or liability or by other factors. Means we have also understood that if the cost cannot be measured reliably, it will not be recognized. Correct? For provision, we have done that if reliable estimation cannot be made, it cannot be recognized. Already we have covered all this point. So can I say, with relevant information, it must also provide faithful representation. How the information will provide faithful representation is based on the level of measurement uncertainty. Correct? Associated with the asset or liability or by any other factor. Understood? Means inflow is probable, but it cannot be measured reliably. Correct now? Means in case of intangible assets which are self-generated, inflow is probable. It will provide future economic benefit, probable future economic benefit, but cost cannot be measured reliably. Therefore, self-generated intangible asset cannot be recognized. Means Ind AS 38 is also based on this. I hope you are getting all the points. Correct? Understood why I have not taken initially this chapter? Otherwise, I would have also died to explain all these points. Correct? Then that time it would be pura rectification. I will say, you said yes sir, yes sir, okay, okay. De-recognition. Recognition you understood. Now coming to de-recognition. De-recognition. De-recognition is the removal of all means in its entirety, a part of recognized asset liability from an entity's balance sheet. Means normally when we say de-recognize, so we de-recognize only asset liability. We don't de-recognize income and expense. Recognition we do asset, liability, equity, income and expense, but for de-recognition it is only asset, liability and equity. Understood? Income and expense will not be de-recognized because it does not have closing balance. It does not have closing balance. Understood? Therefore, de-recognition is the removal of all or the part of recognized asset or liability from entity's balance sheet. De-recognition normally occurs when an item is no longer meet the definition of an asset or liability. No longer meet the definition of what asset or liability. Correct? Can you say for equity also we don't de-recognize? Why we don't recognize equity? Because equity there is no obligation to pay. And if there is an obligation to pay, it is not an equity. Correct now. So equity will be de-recognized only in case of liquidation. Are you able to understand? Therefore, they have not given what equity here. So de-recognition is only for asset or liability. De-recognition is only for asset or liability. Understood? Have you understood? Yes, sir. Elements of financial statement: asset will be de-recognized when the entity loses control of all or part of the recognized asset. When they loses control. Understood? Liability will be de-recognized when the entity no longer has a present obligation for all or part of recognized liability. Means they do not have now any present obligation to transfer economic resource. I think understood. Accounting requirement for de-recognition are as below. De-recognition of any asset or liability that have expired or have been consumed or collected or fulfilled or transferred, referred to as transferred component, and recognize any resulting income or expense. Means when you will de-recognize any asset or liability, when the asset or liability has been expired or consumed. Consumed means what? When the inventory is consumed, raw material is consumed, or this property, plant and equipment is consumed during its useful life. Correct. Or collected, amount is collected, cash flow is collected, or fulfilled when the obligation is fulfilled, or transferred when the asset or liability are transferred. Correct. So in that case, it will be referred as what? Means in case of transferred, it will be referred as transferred component, and recognize any resulting income and expense. Means what journal entry you will do? What journal entry? For asset what? बताओ बोलो. Expense account debit to asset. बोलना. And for liability? Liability account debit to income. Wrong. Wrong. तो बोलना. Decrease in asset means what? Decrease in asset means what? Array, rules I am not asking. It means what? Expense only. Expense means what? Either decrease in asset or increase in liability. So here decrease in asset means de-recognition of asset will result in what? Expense. And this is decrease in liability means what? Income. So corresponding income. There is something wrong in this journal entry. But okay, this journal entry will be done only when it is consumed. Means when the asset is consumed. Depreciation account debit to property, plant and equipment. Then this is correct journal entry. When it is collected, then there is no corresponding income or expense. When it is fulfilled, there is no corresponding income or expense. Means if the liability is discharged, the journal entry liability account debit to cash or bank. Therefore, I will not give this journal entry, otherwise you will be confused. But I hope you have understood and recognize any corresponding income and expense. It does not mean that every time it will have corresponding income and expense. Ha. De-recognition of asset liability may have corresponding income and expense, but not always. For example, you have a financial asset receivable. If it is collected, it is de-recognized. Now you have a receivable of 10 lakh, but you have collected only 9 lakh in full settlement. Then the net amount will be what? The difference amount will be what? Expense. You have not collected na? Are bolna re. So what they are saying is recognize corresponding income or expense, if any. Understood. If liability, the settlement amount is 10 lakh, but you have settled only 9 lakh, the difference will be gain. That will be transferred to PL. That will be transferred to PL. Understood now? Have you understood? Yes, sir. To de-recognize any asset liability that have been expired. Contractual right to receive cash flow is expired. We have done taja taja. Under what? Ind AS 109 derecognition of financial asset. Correct? And have been consumed. Inventories are consumed, raw materials are consumed, property, plant and equipment are consumed. Collected, cash flow is collected. Fulfilled, cash flow is fulfilled, means cash outflow is fulfilled. Obligation to pay cash outflow, that is fulfilled. Or transferred, entire asset or liability has been transferred. Correct? Yes, sir. Continue to recognize the asset or liability retained. We have done with Taja in our financial instrument chapter about partial derecognition of financial assets. You can relate. Understood why I have taken immediately after that chapter, because now you can relate this entire chapter. Partial derecognition, in case of partial derecognition of financial asset, some component is transferred and some component is retained. So will you recognize any gain or loss in the component retained? No. No, that only they are saying. Continue to recognize assets or liability retained, referred to as retained component. This is transferred component. This is retained component. Accordingly, no income or expense are recognized on the retained component as a result of derecognition of transferred component unless the derecognition result in changes in the measurement requirement applicable to retained component. Means if the measurement criteria of retained component is changed, then only there will be gain or loss. Understood? Otherwise, there will be no gain or loss. Understood? I will say for these, refer what? Refer derecognition of financial asset and financial liability under what? Ind AS 109. But it does not mean that they are dealing, this concept dealing only with financial asset. It is also dealing with property, plant and equipment also. This conceptual framework is dealing with all assets, all liabilities. Got it? Yes, sir. Applying following presentation and disclosure requirement. What they have is presenting any retained component separately in the balance sheet. So you can remember under Ind AS 109 last class whatever we have done, principal component and interest component, whatever has retained was disclosed separately. There were two components retained, principal and interest, that were disclosed separately. That is only given. Presenting any retained component separately in the balance sheet. Understood? अरे बोलना रे. Presenting separately in SOPL, any income and expense recognized as a result of derecognition of transferred component. Due to derecognition of transferred component, any gain or loss will be transferred to SOPL only. Yes, sir. Now, whenever I am saying SOPL, SOPL means what? PL plus OCI. Huh? It can be PL, it can be OCI. When I am saying SOPL, it has two components, PL plus OCI. This gain or loss may be transferred to PL or OCI. So when I am saying statement of PL, it can be PL OCI. When I am saying only PL, it will be PL. When I am saying only OCI, it will be OCI. Got it? So when I am saying income and expense transferred to SOPL, it can be PL or OCI. It can be PL or OCI. Got it? अरे बोलना. Yes, sir. Correct. Providing explanatory information. Providing explanatory information. Correct. You want break? You want break? So we'll take 5 minute break. Can we start once again, everyone? Okay. So before break, we have completed up to topic number 6. How many topics are there? Topic number 7, 8, 9. 3 topics are left. Very simple now. Now, topic number 7, measurement. Important. Measurement. Means, of course, once the assets, liabilities are recognized, then we need to find out at which amount it should be measured. Income and expense, at what amount it should be measured. Correct now. So, of course, can I say for measurement, we have done respective Indias. Respective Indias means inventory initially at cost, subsequently at cost price or NRB, whichever is lower. Property, plant and equipment initially at cost, subsequently at cost model or revaluation model. Investment property initially at cost, subsequently at under cost model or no revaluation. Correct? Intangible assets similar to property, plant and equipment. Then biological asset initially at fair value less cost to sell, subsequently at fair value less cost to sell. Correct now. Means we have done measurement, and that measurement, whatever we have done, is based on this conceptual framework. Are you getting? Means once you have understood that, this is very simple. We have done financial asset, amortized cost initially at fair value plus transaction cost, subsequently at amortized cost by applying EIR, FBT OCI, debt instrument, equity instrument, initially at fair value plus transaction cost, subsequently at fair value. Correct now. I hope you are understanding whatever I am saying. So if you have understood that, now it will be very easy to explain from my point of view. So measurement basis, so they are saying there are actually four bases of measurement. Four bases of measurement. First is historical cost, then current value. Current value means there can be three bases. Fair value, fair value, value in use. Oh, अच्छा ये बात. Where you have done value in use? For impairment. So for impairment, we have considered value in use, correct? And current cost. Current cost means replacement cost. Where we have done replacement cost, raw material. Means can I say if you take into consideration, we have used all measurement basis somewhere. We have used historical cost initially, then fair value we have used, value in use also we have used, and current cost also we have used. So there are two values. What is historical cost and current value? Historical cost, current value. Current value means fair value, value in use for asset, and fulfillment value for liability. So value in use for asset and fulfillment value for liability. Correct? And current cost. Now we need to understand, sir, what is the difference between historical cost and current value. So first, historical cost and current value. What is the difference? So can I say this historical cost is derived from the price of the transaction. Derived from the price of the transaction or other event that give rise to them. Means whatever initially paid or received it will become what? Historical cost. Whatever initially paid or received will become historical cost. Got it? Yes, sir. Current value is derived using information updated to reflect condition at a measurement date. Means using the information updated to reflect the condition as a measurement date. Means at what point of time you are measuring, at that point of time you will derive the information which is updated based on that date, and on the basis of that information you will measure current value. Current value can be fair value, value in use, or current cost. Understood? Yes, sir. Changes in value. Can you see whenever we are using historical cost, the changes in value is not reflected. So not reflected, except there is some exception. Except to the extent those changes relate to an impairment of an asset. Of course, due to impairment, there can be some changes. We have done impairment. impairment of property, plant and equipment. Even the cost model means historical cost model, we can say there is an impairment. Are you getting what I am saying? Yes, sir. So changes in value not reflected, except to the extent those changes reflect to an impairment of an asset or a liability becoming onerous. Onerous. Onerous where we have done? In DS 37. Means we have done an executive contract are not recognized unless it become what? Onerous. So once a liability become onerous, it need to be recognized. Correct? Yes, sir. So generally historical cost means for historical cost any changes in the value is not reflected unless it is due to impairment or due to liability become what? Onerous. Understood? Correct. Yes, sir. Current value, can I say changes in value will be reflected from one measurement date to another measurement date, because the current value will change from one measurement date to another measurement date, from one reporting date to another reporting date. Yes, sir. So reflect changes since the previous measurement date in estimation of cash flow and other factors reflected in those current values. I hope you have understood. Correct. For example, if you have taken fair value into consideration, we have done FBTPL or FBTOCI, any changes in fair value will be recognized. Understood. So historical cost, current value you have understood. Historical cost, if I am using historical cost, so what will be the impact in balance sheet and SOP? That we need to understand. What will be the impact means what will be the impact for assets and liability means how to recognize. So the table below summarize the concept of historical cost in each of the assets and liability. So for asset, can is historical cost will be consideration paid plus what? Transaction cost. For property, plant and equipment, we have done this. For investment property, we have done this. Correct. Are you getting? So consideration paid plus transaction cost. Transaction cost means directly attributable expenses to bring the asset in condition of use. Got it? Yes, sir. For liability, it will be consideration received minus transaction cost. Consideration received minus transaction cost. Got it? Yes, sir. Yes, sir. Changes. Correct. Can you say changes? Any consumption of part or of the economic or all the economic resources that constitute the asset, that is depreciation or amortization. Means can I say changes will arise due to consumption of part of part or all the economic resources. Means for example you purchase a raw material and you consume it, so it means it is a changes. Consume means it need to de-recognize now. Understood what I am saying? So changes will arise due to consumption of part or all of the economic resources that constitute an asset. It is nothing but depreciation and amortization. You purchase property, plant and equipment, you start consuming it. Due to that consumption, there will be some changes in the historical cost due to depreciation or amortization. Changes in the historical cost, you will depreciate now minus depreciation. So whatever remain, that is historical cost only, but after consumption. Correct now. So cost minus depreciation, that is what? Nothing but depreciated cost. Correct now. Written down value, that is historical cost only. You can't say this is fair value. Got it? Carrying amount, but carrying amount can be historical cost or can be fair value. Understood what I am saying? Yes, sir. Correct. Now, changes. So, first changes is due to this reason. They are giving the reason of changes. Reason of changes. Correct. Now, can you say when I am saying consumption, we consume asset, we don't consume liability. Therefore, there is no corresponding para for liability. Understood? There is no corresponding para for liability. We consume asset, we don't consume liability. Got it? Yes, sir. Then changes may be due to payment received, contractual cash inflow that extinguish part or all the asset collection from trade receivable. So if there is some asset right to collect and the payment received changes. They change in historical cost. It will be de-recognized either fully or partly. Yes, sir. Similarly, fulfillment of liability, for example, by making payment that extinguish part or all liability, or by satisfying an obligation to deliver the goods. Understood? Suppose we have received some advance from customer. That is a liability. So once we deliver the goods, the liability will extinguish. The liability will extinguish. So that will result in changes in the historical cost. Changes in the historical cost. Understood? I hope this point also you have understood. This all point you know. Correct? Yes, sir. Then changes may be due to effect of the event, that causes the historical cost of the asset to be no longer recoverable. Means if the cost is no longer recoverable, means that need to be impaired. That need to be impaired. Correct? So effect of the event that causes the historical cost of asset to be no longer recoverable, then it means it need to be impaired. So historical cost will change if it is impaired. If it is impaired. Correct? Yes, sir. Similarly, the effect of the event that increase the value of the obligation to transfer the economy resources needed to fulfill the liability to such an extent that liability become onerous. So can I say once the liability become onerous, can I say the obligation to transfer economy resource will increase? Correct now. Obligation to transfer economy resource will increase now. It means liability will increase. So changes in the historical cost means initially executive contract there was no liability. We have done under India's 37. For executive contract there was no liability. But once it become onerous, we created provision for onerous contract. So our liability increases with the effect that liability become onerous. Correct. That they want to say. Effect of the event that increase the value of liability, value of obligation to transfer the economic resources needed to fulfill the liability to such an extent that liability becoming onerous. And liability is onerous if the historical cost is no longer sufficient to depict the obligation to fulfill the liability. The liability become onerous when it to pay more than what historical cost. When it to fulfill more than what historical cost. Understood? Yes, sir. This also we have understood. And can I say it will also changes due to accrual of interest to reflect any financing component. We have done amortized cost. Can I say when I am saying amortized cost, that is nothing but historical cost. So due to amortized cost, we add interest expense for financing component. Correct. Yes, sir. So accrual of interest due reflect any financing component. For asset, it will be interest income. For liability, it will be interest expense. Accrual of interest to reflect any financing component. So these are the reason for changes in historical cost. The first reason, consumption, is depreciation and amortization. Second, what? Collection of payment for asset and sale. Correct. Third reason, impairment. Fourth reason, accrual of interest. Due to this reason, the historical cost of asset may change. For liability, first reason, fulfillment of liability by making the payment, or the liability becoming onerous. The last was accrual of interest. Got it? Yes, sir. Now coming to the current value, historical cost you understood. Coming to the current value. Current value means what? Either it will be exit value or entry value. Exit value means what? Ki the no, let me speak. Exit value means what? There are two stages. One is what? At the time of purchase, what is the value? And what is the value at the time of sale? My question to you all, from my point of view, I purchased this calculator. The price is 300. Understood? I purchased this calculator, price is what? 300. Now at the time of sale, the price will be same or different? Different. Means can is the buy price and sale price is different from one entity's point of view. Correct. I am not asking from buyer and seller point of view. In one transaction, if I am the buyer, you are the seller, the price remains same at that point of time. But from my point of view, this is my asset. So what is buy price? That is entry price coming in. Sale price means what? Exit price. Sale price means what? Exit price. Correct. So can you see, when I am saying exit value means the value of asset is determined from the point of view of sale. When I am saying entry price, the value of asset is determined from the point of view of purchase. Understood? So can you say current value can be exit value or entry value? When I am saying exit value, it can be fair value or it can be value in use or fulfillment value. My question to you are value in use. How you have calculated value in use? Present value of present value of future cash flow to be generated from the use of the asset, and present value plus present value for the amount to be received on disposal of the asset at the end of useful life means it is also an exit value. Entry value means current cost. Entry value means current cost. What was the replacement cost? Replacement cost is the price to be paid if the similar asset is purchased today. That is the replacement cost. If you remember India's 2, correct? Means fair value, value in use, current cost. I hope you understood fair value and value in use. If I am saying value in use, in your mind what should come? Fulfillment value for liability. For asset it is what? Value in use. For liability it is what? Fulfillment value. But I will say only what? Value in use to make it simple. Correct? So fair value and value in use are which value? Exit value. And current cost is which value? Entry value. But all are which value? Current value. These are not historical cost. These are not historical cost. My question to you all, whether initially we do recognition at fair value? At Nalayak, yes. Biological asset initially recognized at fair value less cost to sell. Abhi we have done financial asset will be initially recognized fair value. Fair value can be transaction price bet, but if it is not at market term, then we need to find out fair value. Are bolna, everything we have done. So initial and subsequent recognition can be done at historical cost, can be done at what? Fair value. But case value in use is normally not required for initial recognition. We never do initial recognition at value in use. Correct now. So normally this value in use is not used for initial recognition. Initial recognition will never use value in use. I hope you are understanding my emotions. Correct? It is normally used for what? Impairment. Till now we have used the term value in use only for impairment. Only for impairment. Let's see what they want to say. Exit value. Exit value means fair value and value in use or fulfillment value. So fair value, value in use. So let us understand the difference between fair value and value in use. The main difference is what? Fair value is based on market expectation, market condition. Ind AS 113. When I say fair value, what should come in your mind? Ind AS 113. So fair value is based on market expectation, market condition. However, value in use is based on entity specific condition. This is the main difference between fair value and value in use. So what is the meaning of fair value? This meaning we'll do in detail where under Ind AS 113. But you can understand price that would be received to sell an asset. Oh, acha, ye baat. Sale and asset, entry, exit, exit. The price that would be received to sell an asset or paid to transfer a liability. Understood? Both are which value? Exit value. Price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participant at a measurement date. In an orderly transaction, it means what? It should not be influenced by some personal relationship. Means if I sell this asset to my subsidiary, so it can be at what? Some price which may be affected with that relationship. Correct now. So in an orderly transaction means the transaction should be between unrelated party. The transaction should be between unrelated party. In an orderly transaction between market participant at a measurement date. Detailed discussion where more discussion need to be done, but not now. But I hope you have understood the emotions of the definition. Correct. What is the meaning of value in use? Value in use, we have done where under Ind AS 30 36. Present value of the cash flow or other economic benefit that an entity expect to derive from the use of an asset and from its ultimate disposal. Oh, same thing we have done. Correct. Okay. What is the fulfillment value? Just reverse. Present value of cash or other economic resource that an entity expect to be obliged to transfer, means to pay. Expect that entity expect to oblige to transfer as it fulfill a liability, means can I say we can say the fulfillment value is present value of contractual cash outflow which the entity is expected to pay on transfer of liability. Understood? Yes sir, I hope you have understood. Correct? Any doubt? No doubt. Now, value from whose perspective? So this reflect the perspective of market participants. Market participant means it is calculated from the perspective of market participant under market conditions. Under market conditions means it might happen there are some entity specific restrictions which will not be taken into consideration to determine fair value. For example, I'll just give a simple example. You will be able to understand with that example what I want to say. For example, we have a land. Correct? We have a land and that can be used for commercial purpose. But as per entities restriction, that is not used for commercial purpose. But if used for commercial purpose, we can derive more benefit. Understood? Means I have purchased land, but I am not using for commercial purpose because I don't want to use it. Correct now? And entity has decided not to use for commercial purpose. Understood? So can you say what is the entity's restriction that it will not be used for commercial purpose? And now if you calculate value from entity's point of view, can you say it will be less? Because we are not able to derive the entire economic benefit from such asset. Now fair value will be calculated from the point of view of market participants. Now can you say if I sell this land, the other party can use it for commercial purpose and derive higher benefit. So fair value, for determination of fair value, will you consider the restriction which has been given by entity? No. The restriction should not be considered. Understood? So that want to say reflect the perspective of market participant. Understood? Participant in market to which the entity has access. The asset liability is measured using the same assumption that the market participant would use when pricing the asset or liability if those market participants act in their economic best interest. Means as per market participant, how much price can be derived from the sale of that asset. Correct. However, in this value reflect entity specific assumption rather than assumption by market participant. Means in this when we are calculating value in use, so can you see in this we'll use that restriction because now entity has decided not to use for commercial purpose. Therefore, we'll find out the present value of cash flow which can be used only for the purpose in which entity want to use it. This NRV is just like value in use. When I am saying value in use can be also said NRV. NRV for inventory. NRV is based on entity specific restriction or market restriction. Correct now. NRV means what expected selling price from the point of entity. From the point of entity, not from the point of market. So NRV can be considered as value in use for inventory. Value in use for inventory. Understood? So NRV and fair value are different. I have already said NRV and fair value are different. Got it? Got it? Got it. Yes, sir. How determine? How determine? So fair value to will understand where? I will say refer Ind AS 113. And this already we know as per Ind AS 36. Already we know as per Ind AS 36 na. Value in use. Correct. So cannot be observed directly and can means I am right now reading for value news, cannot be observed directly and are determined using cash flow based on measurement technique. Means if I ask you find out the future cash flow to be obtained from the use of that asset, can it be derived directly? Means can I say it should be based on some estimation? Means the informations are not available directly. The cash flow information are not available directly. Means when you are estimating value news, it is based on future cash flow. The future cash flow is not observed directly. It need to be measured based on some valuation technique. Understood. Therefore, they are saying cannot be observed directly and are determined using cash flow based measurement technique. Understood. However, fair value can be can be determined directly by observing prices in an active market. Means we'll find out what is the price prevailing in an active market. So direct information. Means if I want fair value of shares of Reliance Industry, we'll go to which market? Bombay Stock Exchange or National Stock Exchange? There are two markets. Whatever price listed, that become the fair value of what? Investment in equity shares. I hope you are understanding. Correct. So it can be determined directly by observing prices in an active market or using measurement technique. Means if there is no active market, so there should be some technique. That technique we'll discuss where? Under India's 113. Or using measurement technique, for example, cash flow based measurement technique. So this is one of the technique which is given by India's 113. Understood. But one thing you have understood that fair value is normally derived from observed information directly, and value news cannot be derived directly from observed information. For that we need some information based on some techniques. Correct? Yes, sir. Transaction cost consider in measurement. My question to you is this already I have said for calculation of fair value whether you will consider transaction cost. Transaction cost means cost incurred at the time of sale, not transportation cost. Transaction cost. So for determination of fair value, will you consider transaction cost? Already I have said somewhere. Transaction cost will be adjusted for determination of fair value. For determination of fair value, not fair value plus transaction cost. I not consider na. We have done financial asset fair value plus transaction cost means transaction cost is separate. For determination of fair value, transaction cost will not be considered. Transportation cost will be considered. We have discussed where under India's 41 biological asset, agriculture, forgotten. You forgot. Everything has been done in detail, even though we have not done India's 113. Correct? So neither those costs incurred on initial recognition nor those costs to be incurred on disposal of asset or settlement of liability are considered. Means transaction cost will not be considered for determination of fair value. However, for value use, whether transaction cost will be considered. Yes, we have considered the disposal value. You can see we have written now and from his ultimate disposal. So whatever sale proceed we are obtaining from disposal, that is net of disposal cost. Net of disposal cost. Correct. So these costs incurred on initial recognition are, of course, transaction cost. 1 minute. These costs incurred on initial recognition are not considered, but the present value of those costs to be incurred on disposal of the asset or settlement of liability are considered. I hope you have understood. Normally I have said value in use will not be considered for initial recognition. Therefore, this point is to be clear. Will never consider value in use for initial recognition. I hope you are understanding. Correct now. So these costs incurred on initial recognition are not considered. Means transaction cost at a time of initial recognition will not be considered, but transaction cost incurred at a time of sale will be considered. Will be considered. Understood? I hope you have understood this para. Correct? Any doubt? No doubt? Any doubt? Got it? Yes, sir. So we have understood the difference between fair value and value in use or fulfillment value. However, we have also understood that initial recognition will never be done at value in use. However, initial recognition can be done at fair value. Yes, sir. Coming to now entry value, current cost. Current cost. Can you say historical cost is also at the time of purchase of asset and current cost is also at the time of purchase? So what is the difference between historical cost and current cost? Historical cost and current cost, that we need to understand. Correct? So what they have given? Value determined on. Can you say historical cost is determined on the date of acquisition of asset or incurrence of liability? So historical cost is determined on initial recognition. On initial recognition means on the date of recognition of asset or on the date when the liability is incurred. But current cost is determined on each measurement date, means for subsequent recognition. Each measurement date. This is the first difference. Second difference component, कि for asset historical cost means consideration paid plus transaction cost. For liability is consideration received minus transaction cost. But current cost for asset consideration that would be paid. Consideration that would be paid to acquire what? For example, this is a calculator. We have purchased 5 years before. So at the time we have purchased, that time whatever we have paid, that becomes historical cost. Now we are doing measurement of this calculator. So I will say how much consideration would be paid if we acquire similar calculator as on today. Understood? The same calculator if I acquire today, how much consideration would be paid, that become what? Current cost. Understood what I am saying? Means on measurement date, how much consideration would be paid to acquire similar asset, that will become current cost plus transaction cost. So consideration that would be paid plus transaction cost, that would be incurred. That become what? Current cost. See, liability, consideration that would be received if you acquire similar liability today. Correct now. So consideration that would be received minus transaction cost, that would be incurred. Correct. Normally current cost also we don't use much for initial and subsequent recognition. Normally we use historical cost or fair value. Value in use will be used for what? Impairment. Correct. Current cost normally we don't use. Got it? Yes, sir. Then information provided by a particular measurement basis. Particular measurement basis. Now we have understood that we have four bases: historical cost, fair value, market participant assumption, value in use, entity specific assumption, current cost. These are the measurement basis. You can see value in use, they have given some star mark A. What is written in A? Check करेंगे. A. This column summarizes the information provided if the value used, if value in use is used as a measurement basis. However, value in use may not be a practical measurement basis for regular remeasurement. Normally, value in use only used for impairment, not for regular remeasurement. Correct? That means subsequent recognition we do at fair value or at cost only, not at what? Value in use. Value in use is used only for what? Impairment. I hope you understood. They have given that clarification. They have given this clarification about what value in use. It is entity specific assumption based on entity specific assumption. Yes, sir. So carrying amount. So for historical cost, what will be the carrying amount? Historical cost including transaction cost to the extent unconsumed or uncollected and recoverable. Have you understood? To the extent unconsumed means whatever consumed will be de-recognized now. To the extent uncollected, whatever collected, de-recognized. To the extent recoverable, if not recoverable, impaired. Understood? Yes, sir. So historical cost including transaction cost to the extent unconsumed, uncollected and recoverable. Now, fair value means price that would be received to sell a asset without deducting transaction cost on disposal. Means transaction cost will not be considered. Correct? Price that would be received to sell an asset without deducting the transaction cost on disposal. Without deducting the transaction cost on disposal. Got it? Correct. What is value in use? Present value of future cash flow. Acha, this we are doing for asset, huh? Not for liability. I think you have understood we are doing for asset only. Present value of future cash flow from the use of the asset and from its ultimate disposal after deducting what? After deducting present value of transaction cost on disposal. Means when I am saying present value from its ultimate disposal, so when I am saying ultimate disposal, it will be net proceeds. Correct now? Means amount to be received on disposal minus what? Transaction cost. Minus transaction cost. Got it? Have you understood this point? Got it? Have you understood? Yes, sir. Current cost including transaction cost to the extent unconsumed, uncollected or recoverable. So normally historical cost and current cost will find similarity. Got it? And you'll find fair value and value in use for us a similarity. There is some difference about transaction cost. Fair value without transaction cost, value in use with transaction cost. Means when I am saying without transaction means without deducting. Here with the deducting. Correct? Yes, sir. Now, then in statement of PL, this was in balance sheet. Okay. This was in balance sheet. Correct? Yes, sir. Carrying amount will come in balance sheet, na? Correct. Now in SOPL may will think about income and expense. In SOPL we'll think about income and expense. So initial recognition, my question to you all, whenever we are doing initial recognition at historical cost, whether there will be any income or expense? No. You can see no. Here also no. So initial recognition, no income and expense when we are doing recognition at historical cost or current cost. Because can I say on if the measurement date is the initial date, then current cost and historical cost will be same. Means if I purchase this today, so can I say current cost and historical cost will be same? On reporting date means on subsequent date, the current cost and historical cost will be different. Are you able to understand whatever I am saying? Yes, sir. But can you say fair value? So whenever we measure fair value, the difference might happen between fair value and the price paid. The difference will be transferred to PL. Correct now. So difference between consideration paid and the fair value of the asset acquired will be transferred to PL. We have done same thing in biological asset. Biological asset to bank, if you remember. So bank, suppose we have paid 1 lakh, then we have paid some transaction cost rupees 10,000. So it become 1 lakh 10,000. But it will be initially recognized at fair value less cost of disposal, means transaction cost. For fair value, transaction cost will be not deducted. But when I am saying fair value less cost of sales, then as per Ind AS 41, they are saying deduct transaction cost. Understood? So in this case, suppose fair value, let us assume 1 lakh minus transaction cost, let us assume 10,000. So it become 90,000. So difference where? In PL only. Correct? Yes, sir. So difference between consideration paid and fair value of asset acquired will be transferred to SOPL. When I am saying SOPL, it can be PL, OCA as the case may be. It can be PL or OCA, not only PL, it can be OCA also. Correct? Depending upon the nature of the asset. Transaction cost on acquiring the asset. Can you say whatever transaction cost you have paid to acquire the asset will be charged to PL as an expense automatically? Correct? So transaction cost on acquiring the asset. Have you understood? Bolo. Any doubt? Yes, sir. Then value in use, same thing. Difference between consideration paid and value in use of the asset acquired, the transaction cost on acquiring the asset. Transaction cost on acquiring the asset. Have you understood? Not understood. Have you understood? अरे बोलना रे. Not understood. Let us link with what? Financial asset. Financial asset. So in financial asset we have amortized cost, we have FBTOCI, we have FBTPL. My question to you all, initial recognition is done at what? Fair value, fair value, fair value. But here plus transaction cost, plus transaction cost. This transaction cost means what? On acquisition of the asset? Transaction cost incurred on acquisition of the asset? अरे बोलना रे. You purchase investment debenture and you paid brokerage. The brokerage become transaction cost. Transaction cost will be added in case of AC and FBTOCI, but not in case of FBTPL. Correct. Understood. Now, suppose fair value is 1 lakh and transaction cost is 10,000 in all. Correct? In all. And suppose normally on acquisition date, whatever we are paying, that is equal to what? Fair value only. Normally. But suppose, suppose consideration paid is equal to 1,20,000. Let us assume consideration paid is 1,20,000, even though fair value is what? 1 lakh. However, its consideration paid should be equal to 1 lakh only. Are you able to understand? Now, in the first case, amortized cost, what will do? Financial asset account debit, how much? 1,10,000. To bank, how much? To bank, how much? 1,20,000 plus transaction cost paid. That is, consideration paid will be plus transaction cost also, na? The total payment is 1,20,000 plus 10,000. Correct? Now difference will be transferred to what? Difference will be transferred to SOPL. Correct? Understood. Now Ind AS, just try to understand. Ind AS 109 says it will be fair value plus transaction cost. Transaction cost will be capitalized. So you can see in this case transaction cost is not transferred to PL. It is capitalized. So and here it is saying transaction cost on acquiring of an acquisition of the asset will be transferred to PL. But which will prevail? Ind AS will prevail. What I want to say, this is a general principle they are saying. This is general principle, but it cannot override the requirement of Ind AS. That I want to say. Understood what I am saying? Have you understood? What they are saying, difference between consideration paid and fair value will be transferred to PL. This is okay. But transaction cost can be capitalized or may be transferred to PL depending upon the nature of the asset as per respective Ind AS. That I want to say. This is a general principle. Are you able to understand? Have you understood this point? Correct? Same thing is written for value in use. I hope this point you have understood. Any doubt? Have you understood? So just write down if you have some doubt. Transaction cost may be capitalized as per the requirement of Ind AS. Transaction cost may be capitalized as per the requirement of Ind AS. Correct? The doubt will be over. Ind AS will prevail over what? Conceptual framework? Yes, sir. Then sale or consumption of the asset. Whenever you sell or you consume the asset, so can I say it will decrease the asset and it will increase the, when you sell the asset, when you sell the asset, it will decrease the asset, increase the, this is inventory. I am asking about this inventory, not about cash, whatever you have received on sale. This inventory will decrease and expense will increase. Now, cost of sales will increase. Sale. Just try to understand. What I am saying, just try to understand this about this asset, inventory, you sold it. So this is decrease in asset and every decrease in asset will increase the expense also, na? So we used to pass one journal entry cost of sales to inventory. Whatever cash received, that is a revenue. Whatever consideration received, that is a revenue. So can you say expense equal to historical cost of assets sold or consumed? अरे बोलना रे. When you have sold the inventory, what journal entry you have done? Cash or bank account debit to sale. And as per Ind AS 2, once the revenue is recognized, the carrying amount of inventory will be recognized as an expense. So what journal entry you will do? Cost of sales account debit to what? Inventory. Correct. Means expense will be recognized with what amount? With the historical cost of inventory sold. And sales will be recognized, income will be recognized with the consideration received. So there are two effects now. Understood? That is only said. Key expense equal to the historical cost of assets sold or consumed. Correct. Income equal to consideration received. Income equal to consideration received. And this expense and income could be presented on gross or net basis as per the requirement of Ind AS. My question to you is, can you gross it at, sorry, can you net it? Can you net this? Can you net this income and expense? No. This cannot be netted off. Means in SOP you write down revenue separately and income separately. But if it is sale of PP, so can you see it can be presented on net basis because we only transfer the gain or loss on sale toward SOPL. So in case of PP, we can pass this journal entry cash account debit to PP and the difference become what? Gain or loss. So it can be presented at a gross or on net basis. Have you understood this point? Depending upon the nature of the asset as per the requirement of Ind AS, as per the requirement of Ind AS. Understood? Have you understood this point? Correct. And any expenses for transaction cost on selling the asset means, of course, any transaction cost on sale of asset will be also recognized in here. However, we take consideration received net of transaction cost only. Consideration received will take net of transaction cost in case of property, plant and equipment, etc. Correct? Or in case of inventory, any selling expense will be recognized separately. In case of inventory, selling expense means transaction cost will be recognized separately. Carriage outward, if you remember. Commission on sale, if you remember. Understood? Yes, sir. I hope you have understood. First point, have you understood about historical cost? Once you understood historical cost, balance I need to read only. Historical cost, have you understood? So one second. Can you repeat with me? Expense equal to what? Historical cost of assets sold or consumed. Income equal to consideration received. It could be presented on gross or net basis. Transaction cost on sale of asset will be recognized in PM. Same. In case of fair value, expense equal to fair value of assets sold or consumed. Income is equal to consideration received. Could be presented on gross or net basis. Expense on transaction cost on selling the expense for the transaction cost on selling the asset. Same thing. यहाँ पर expense equal to value in use. Expense equal to value in use of the assets sold or consumed. Income is equal to consideration received. Could be presented on gross or net basis, but in this it is silent. Why? Because value in use has already considered the transaction cost on sale of asset. Means this value in use whatever you have calculated, that is already after deducting what? Transaction cost on sale of asset. Understood? However, this is totally bakwas. This third column is bakwas. Because why? Because it will not be used. It will not be used. Value in use को हम use नहीं करते हैं. We don't use for initial and subsequent recognition. Understood? Now here, expense equal to current cost of assets sold or consumed. Income is equal to consideration received. Could be presented on gross or net basis. Expense for transaction cost on selling of the asset. I hope you have understood. Correct. Interest income. Can I say if the asset is a financial asset, so interest income will also come. If asset is a financial asset, so interest income will also come. So can I say here interest income at historical cost updated if asset, sorry, interest income at historical rate, understood? So interest income will be recognized at historical rate updated if the asset bear variable interest. Variable interest means floating rate of interest. Understood? Means in this case, whenever we are doing accounting on historical cost, then we recognize the interest income at historical rate. Understood? Here, reflected in income and expense from changes in fair value. Can I say whenever we are doing accounting, yeah, measurement of fair value, automatically with that fair value it will be reflected. So interest income will be reflected in income and expense from changes in fair value. From changes in fair value could be identified separately. Have you understood this? If you have understood this, means you have understood Ind AS 109. I will explain. We have done FBTOCI, debt instrument, and we have done FBTPL. Today you will understand my suggestion. I have given my suggestion here FBTPL, and you will understand my suggestion is perfectly correct. My question to you all, this is 1 lakh and this is 1,20,000. Whatever gain is coming, it already include interest income or not? Bolo. Suppose contractual interest is 10,000. Suppose contractual interest is 10,000. Badao, what is my gain? My gain is what? 1 lakh minus 10 minus 1,20,000, how much? My contractual cash inflow आ गया ना? When I am writing by bank, it means what? Contractual interest income received? Bank? Correct. So my gain is what? 30,000. This is my total gain na? Total gain. In this case, what we do? Same thing. 1 lakh, 10,000, 1,20,000. Same thing. Let us assume EIR is equal to contractual rate of interest. This everything you can understand only when you have done Ind AS 109. If you have not done Ind AS 109, if you have not revised Ind AS 109, whatever I am explaining, you will not be able to understand. Therefore, immediately after that chapter, I am doing this. Correct. My question to you all, in case of FBTOCI debt instrument, do you recognize interest income separately? Interest income I am saying, yes, by applying? Yeah. So we'll do 2 interest income, how much? 10,000. And now my gain will be what? 20,000. This will be transferred to what? OCI. But here do we recognize interest income separately? Not applicable. And this fair value gain will be inclusive of interest income? Bolo yes or no? That only I have said na. Are bolna re. That only is said. Now you will understand. Reflect reflected in income and expenses from changes in fair value. Means when I am saying this 30,000, in this 30,000 interest income is reflected or not? अरे बोलना रे, in this 30,000 interest income is reflected or not? Yes. Then what they have said could be identified separately. Oh, could be identified separately. Whether in case of FBTOCI we identified separately or not. But could be means it is not mandatory to identify separately. And therefore I said as per Ind AS 109, in this case interest income will not be identified separately because there is no concept of ER here. Interest income is calculated by applying ER only, and there is no ER in case of FBTPI. So could be identified separately means it is not mandatory to identify separately, and therefore I say my suggestion whatever I have given under Ind AS 109 is 100% correct. Understood. Now I hope with that explanation you have understood this para. Otherwise, so I will also try to explain. Have you understood? So reflected in income and expense from changes in fair value could be identified separately. Same thing, yeah. Reflected in income and expense from changes in fair value, sorry, changes in value in use could be identified separately. In this, interest income will be calculated at current rate. Got it? Impairment. Impairment. I hope understood. Historical cost will be impaired. Correct. So expenses arising because historical cost is no longer recoverable. Transfer to PL. Correct. Can you say if it is measured at fair value reflected in income and expense from changes in fair value? बोले yes or no? If it is measured at fair value, not fair value less cost of disposal. However, India 36 says that recoverable amount will be higher of value in use and fair value less cost of disposal. But if it is measured fair value, automatically it is reflected. बोलना yes or no? Are you able to understand? So reflected in income and expense from changes in value could be identified separately. Here also reflected in income and expense from changes in value in use could be identified separately. Correct. Expenses arising because current cost is no longer recoverable. So if the current cost is no longer recoverable, the difference will be what? Impairment. Value changes. Value changes. So if we are doing measurement at historical cost, not recognized, any changes in the value will not be recognized. If we are measuring the asset at historical cost initially and subsequently, then no changes in fair value, no changes in the value, except to the extent of what? Impairment. Can you see here reflected in income and expense from changes in fair value? Here reflected in income and expense from changes in value in use. Here income and expense reflecting the effect of changes in the prices, that is holding gain and holding losses. This current cost may change at each measurement date. Current cost may change at each measurement date, and can I say this will be considered as what? Income and expense reflecting the effect of changes in the prices, and that will be known as holding gain or holding loss. It is as simple as if you are holding raw material. If you are holding raw material, the replacement cost may be lower than historical cost. So if you are holding it, there will be holding loss. Correct? Understood? Yes, sir. This is what the measurement principle. This BCD you can read, you will understand. So we have understood what? Information provided by particular measurement basis only for asset, not for liability. Correct? I hope you have understood whatever we have done till now. Some portion is left. Correct? That will do it. But for a time being, we'll take some break. Okay? So we'll meet in the next session soon. The chapter is not yet complete. Okay, sir? Till then, thank you very much. Can we start once again, everyone? So in the first session of this chapter, we have completed up to this point, means up to which topic? Information provided by a particular measurement basis. In that only we have done assets. Have you understood that? Yes, sir. Coming to liability, this you can read, you will be able to understand. Correct. Means these are the point given for A, B, C, D written here. Correct. Now you can see initial recognition point number B. So what is written? Check करेंगे. Income or expense may arise on initial recognition of an asset not acquired on market terms. Means if any instrument are not purchased at market terms, then of course there can be some what income and expense. There can be difference between the fair value and transaction price paid. Remember, we have done in financial asset, if financial instruments are not at market term, then fair value will not be equal to transaction price paid. So there will be some difference. The difference can be either expense or prepaid expense. It can be some other thing also, depending upon the nature of financial asset. Remember? Correct. That is only. So you will be able to understand, nothing to inform. Coming to liability, the balance sheet. So in balance sheet, what will be the carrying amount for historical cost, fair value, value in use, means fulfillment value now, fulfillment value and current cost. So carrying amount, consideration received, net of transaction cost, means consideration received minus transaction cost. For taking on the unfulfilled part, for taking on the unfulfilled part of the liability, increased by the excess of estimated cash outflow over consideration received. Means for unfulfillment part, so carrying amount will be the consideration received minus transaction cost for unfulfilled part. With any liability which is fulfilled will be derecognized. Will be derecognized. Similarly, fair value will be the price that would be paid to transfer the unfulfilled part of the liability. Price that would be paid to transfer the unfulfilled part of the liability, not including transaction cost that would be incurred on transfer, means without deducting transaction cost, without deducting transaction cost. Correct? Yes, sir. Fulfillment value, it will be the present value of future cash flow that will arise, present value of cash future cash flow that will arise in fulfilling the unfulfilled part of the liability, including what present value of transaction cost to be incurred on transfer of the liability. I hope now I am reading you are able to understand. Correct. Current cost, it will be consideration that would be currently received, consideration that would be currently received for taking on the unfulfilled part of liability. Means if the liability is taken today, how much consideration would be received? Net of transaction cost. It should be the net of transaction cost. Got it? Yes, sir. So I hope carrying amount you have understood. Correct. Then coming to the statement of PL. Initial recognition, can I say there will be no income and expense in case of historical cost? There will be no income and expense in case of current cost. Already I said current cost will be equal to historical cost on initial recognition. Current cost will be equal to historical cost on initial recognition. For subsequent recognition, current cost and historical cost will be different. Correct. Now, initial recognition, fair value. Can I say any difference between consideration received and the fair value? Fair value of liability will be transferred to SOPL. Will be transferred to SOPL. Correct. Similarly, transaction cost on incurring or taking the liability, means transaction cost on the date of recognition of liability, on initial recognition of liability will be also charged to PL if not adjusted with fair value. I can say in this way, means for any liability, means any liability which is amount, which is means for financial liability we have done under Ind AS 109, either it will be amortized cost or FBTPL. So for FBTPL, initial recognition is done at fair value. For amortized cost, it is done at fair value minus transaction cost. You remember? So if it is fair value minus transaction cost, then of course transaction cost will not be transferred to SOPL. Yes, sir. Correct. Similarly, for value in use, difference between consideration received and the fulfillment value of the liability, it should be fulfillment value. Fulfillment value. Correct. So difference between consideration received and fulfillment value of liability will be transferred to SOPL. Any transaction cost on initial recognition will be also transferred to SOPL. Correct? Yes, sir. Now, fulfillment of liability. Can I say whenever liability is fulfilled, it will be de-recognized? It will be de-recognized. Now, if I will read, you will not be able to understand. But what they want to say, fulfillment of liability, income equal to historical cost of liability fulfilled. Correct? Expense for cost incurring in fulfilling the liability. Expense for cost incurred in fulfilling the liability. Means just try to understand. Suppose you have a liability, suppose loan payable rupees 10 lakh. So when you fulfill means you will discharge it. You will pay how much amount? 10 lakh you will pay. So your entry will be liability account debit to cash or bank. Means can I say it is decrease in liability and consideration paid. So can I decrease in liability can be considered as income, and whatever you are paid for discharge of liability means fulfillment of liability will be an expense. But can I say we disclose these on net basis, means we pass journal entry liability account debit to cash, and any difference will be the net income or gain, net income or gain or expense or loss. Understood what I am saying? So what they want to say, income equal to the historical cost of liability fulfilled. Income equal to the historical cost of liability fulfilled. Correct. Expense for the cost incurred in fulfilling the liability. Expense for the cost incurred for fulfilling the liability could be presented on net on gross basis. Means this, if I am saying liability account debit to income and expense account debit to cash, this is which basis? Gross basis. But normally we don't do gross basis, we do what? Net basis. For liability normally we do what? Net basis. We do not apply gross basis. So what they have just given general principle. They have given general principle. It can be accounted either on gross or net basis. Normally it is what? On net basis. So can you say normally it is always net basis? Net basis. Correct. Means what journal entry will do? Liability to cash or bank, and any difference will be income or expense. Any difference will be income or expense. Means liability is 10 lakh but you have discharged only 9 lakh for full settlement. The difference will be what? Your gain, income. Got it? Yes, sir. Same thing, if you have understood this, then you can understand further also. Here income equal to the fair value of liability fulfilled. Expense for the cost incurred in fulfilling the liability. Correct? Income equal to fulfillment value of liability fulfilled. Expense for the cost incurred in fulfilling the liability. Here income equal to current cost of liability fulfilled. Expense for the cost incurred in fulfilling the liability could be presented on net or gross basis. Could be presented on net or gross basis. Could be presented on net or gross basis. Understood? So just write down this journal entry so that when you are reading you will be able to understand what is gross basis, what is net basis. Gross basis journal entry, net basis journal entry. So gross basis journal entry what? Liability account debit to income, then expense account debit to cash. Understood? Correct. Net journal entry will what? Liability to cash. The difference will be what? Either income or expense. Only for your understanding write down. Otherwise you will not be able to interpret what is given. Got it? So this is fulfillment of liability. In fulfilling the liability. But can I say there can be transfer of liability also? Liability may be transferred. Liability may be transferred as you have done in case of business combination. All assets and liability are transferred to other entity. The liability is also transferred, that is not fulfilled. Liability is transferred. Liability is transferred. So in that case also same thing only. income equal to the historical cost of liability transferred, correct? Expense for cost paid to transfer the liability, to transfer the liability. Same here, income equal to the fair value of liability transferred, expense for the cost paid including transaction cost to transfer the liability, income equal to fulfillment value of liability transferred, expense for the cost paid including transaction cost to transfer the liability, income equal to current cost of the liability transferred, expense for the cost paid for the transfer of liability. Same thing. Understood? Correct. They also could be presented on gross or net basis, could be presented on gross or net basis in all cases. Got it? Yes, sir. This also you have understood. Can I say interest expense in case of historical cost? Interest expense will be recognized at historical rates, updated if liability bears variable interest. So if there is a floating interest, then it will be updated with the variable rate of interest. However, in this case, it will be reflected in income and expense from changes in fair value. It will be reflected in income and expense from changes in fair value. Here also reflected in income and expense from changes in fulfillment value. Here interest expense at current rate, interest expense at current rate. Got it? Here you can see reflected in income and expense from changes in fair value, but could be identified separately. That interest expense could be identified separately. Understood? Yes, sir. Effect of the event that causes a liability becoming onerous. So whenever liability become onerous, then we do change the value of liability. Yes, sir. So expense equal to the excess of estimated cash outflow over the historical cost of liability or a subsequent change in that excess. So can you say whatever, suppose historical cost is 10 lakh, but due to onerous, now the liability become 12 lakh. The excess will be recognized as an expense. Correct? So expense equal to the excess of estimated cash outflow over the historical cost of liability or a subsequent changes in that excess, or subsequently that excess may change. Correct? Here, can you say because it is subsequently recognized a fair value, so reflected in income and expense from the changes in fair value could be identified separately. Similarly here, so reflected in income and expense from changes in fulfillment value could be identified separately. Here, expense equal to the excess of estimated cash outflow over the current cost of liability or a subsequent changes in that excess. Understanding? Have you understood this point? This point have been reflected in income and expense from changes in fair value because they are subsequently recognized as fair value. So once it become onerous, we'll take the fair value after it becoming onerous. So suppose initially it was 1 lakh, now it become 2 lakh. So automatically the increase is adjusted in fair value. Adjusted in fair value. But it can be also identified separately. Suppose due to onerous the liability, the fair value increases by 20,000. Suppose due to onerous liability become onerous, the fair value increases by 20,000. So you can say due to onerous it increased by 20,000, and due to fair value measurement it become what 80,000. You can identify it separately. You can identify it separately. Got it? Understood? Yes, sir. Understood. Then value changes. Can I say historical cost not recognized? Any changes in historical cost subsequently will not be recognized except to the extent liability has become onerous. Correct? Half for financial liability, income and expense from changes in estimated cash flow. If it is a financial liability and if the cash flow was estimated and there is a changes in the estimated cash flow, because of that reason, can I say there can be changes in historical cost? There can be changes in historical cost. We have done some financial liability last class. We have done one example, one question we have done where we have estimated the cash flow. We have done the estimated cash flow, and there can be some changes in the estimated cash flow due to repayment, prepayment. Remember that question, will company limited? So in that case, if the estimated cash flow has changed due to prepayment, etc., then of course the historical cost will change. We have changed the amortized cost in that case. Amortized cost. Remember? Yes, sir. Then here any value changes will be reflected in income expense or changes in fair value. Here also reflected in income expense from changes in fulfillment value. Here income and expense reflecting the effect of changes in the price means due to changes in current cost, it will be what? It will be recognized as income and expense as an holding gain or loss. Understood? I hope you have understood. Correct? This is what? Information. The topic was what? It is information provided by particular measurement basis. How to provide the information? Historical cost, fair value, value in use, or fulfillment value, or current cost. Got it? But can I say, as per India's is concerned, we are not using only fair value. Can I say we are using combination of all this? We are using a combination of all this. Sometimes we are using historical cost, sometimes we are using fair value, sometimes we are using current cost, value in use for impairment. We are using all the combination of all this. We can't say that India's is totally based on fair value. We can't say India's is totally based on fair value. For investment property, there is only cost concept. There is only cost model. Understood? Yes, sir. This also you have understood. Okay, sir. Then, factor to consider when selecting a measurement basis for initial and subsequent measurement of an asset or liability. Can I say factor remains same? Relevance and faithful representation. Means whatever measurement basis we are using should provide relevant information and should provide faithful representation of the asset, liability, equity, income and expense. Correct? Yes, sir. So when I am saying relevance, asset or liability characteristic contribution to future cash flow. Correct? Let us read. When I am saying relevance, characteristics of it depends upon the characteristics of assets or liability. Means the relevance of information provided by measurement basis depend partly on the characteristics of asset or liability, in particular on variability of cash flow and sensitivity of value of the asset or liability to market factor or other risk. Means if the cash flow is means just try to understand, if the assets and liability is based on the sensitivity of the value of asset or liability to the market factors, means the value is totally based on market factor, then can I say we should use fair value. We have done in case of revaluation model, if there is a significant changes in fair value, then revaluation should be done on annual basis. Correct now? Means in that case, the value of asset is sensitive to the market factors. Correct. So characteristics of assets and liability. This point have been understood. Then asset or liability carried at historical cost. Means when an asset and liability should be carried at historical cost, what they are saying, if the value of an asset or liability is sensitive to market factor or other risk, its historical cost might differ significantly from current value. Then its historical cost might differ from its current value and hence may not provide relevant information. Then historical cost will not provide relevant information. If information about changes in value is important to the user of financial statement, if information about changes in the value is important from the user of financial statement, understood? Correct. So what they want to say, if the value of an asset liability is sensitive to the market factor, then we should use current value instead of what? Historical cost. Correct. Moreover, because measurement at historical cost does not provide timely information about changes in value, income and expense reported on that basis may lack predictive value and confirmatory value. Means whenever we are doing measurement on historical cost, so can I say we are not recognizing any changes in the fair value. Therefore, whatever information we are providing in financial statement may not be relevant because changes in the value may be important from the user of financial statement point of view. Correct now. So if that is the case, we should provide information based on current value, not based on historical cost. Correct. Therefore, whenever it is held for the purpose of trading, we have said it should be measured at FBTPL, because in that case whatever changes in the fair value is relevant for the user of financial statement. Correct now. So whenever a financial asset is held for the purpose of trading, we said FBTPL, and changes in fair value will be transferred to PL. Whenever it is hold to collect contractual cash flow and sale whenever required, So in that case also changes in fair value is relevant. Therefore, in that case also the fair changes in fair value is transferred to SOPL, but in OCI, but in case of amortized cost, it is only hold to collect contractual cash flow, and there is no use of any changes in fair value. Therefore, it was carried at amortized cost, and we have not recognized any changes in fair value in SOPL. I hope you are understanding. Understood this para? Yes, sir. Assets or liability which are carried at fair value. What they say? Changes in fair value of an asset or liability reflect changes in the expectation of market participant and changes in the risk preference. Means, can I say whenever assets and liability are carried at fair value, so whatever changes in the value is due to the expectation of market participant and changes in the risk preference. Can I say due to market factor and due to risk preference that fair value may change? Fair value may change. We have done that. If suppose, just try to understand कि you have taken a loan, you have given a loan, better. You have given a loan at this point of time, correct? And market rate of interest was 10%, 12% and 14%. My question to you all, due to this market rate of interest, fair value will change or not? Fair value of this financial asset will change. Fair value of this financial asset will change. So that they are saying changes in fair value of asset liability reflect changes in the expectation of market participant. So once the market rate of interest will change, the expectation of market participant will change, and due to that changes in the expectation of market participant, fair value will change. Fair value will change. When I am saying market price is listed, market price is stock market, can you see that also change due to the expectation of investor? Correct now. Means in a economy which are under recession, there will be no buyer. Means now what can I say? There is no buyer. Means expectation of the buyer is that they don't want to purchase right now, and due to that market price will fall down. Even though that company is a profit making company, due to COVID-19, what happened? The index in Nifty or Sensex both, you know about this now. Bombay Stock Exchange and National Stock Exchange came down to 20, I think, from 45,000 something. 45 na? 45 that time, I forgot. Came down to 27,000. That time you have invested. How many you invested? Not invested na? Why? Believe me, I was thinking to invest, but risk factor. Believe me, I was having a saving account, means I kept it. Ki I will invest, but due to risk factor, I have not invested. Means from 45 it came to 28,000. Now I was thinking it will go down, it will go down, it will go down. Now it came to 60,000. From 20 it came to 60,000, and I have not invested that time. Now I am investing. Why I am investing now? It is increasing. So my market expectation, means my expectation is based on market expectation. Now everyone is buying, so I am also buying. If everyone is selling, I am also selling. Understood? Correct now. When there was CPTs, then everyone was doing CA. You ask any second commerce student what you are doing CA, because CPT entry was very easy. Now in CA foundation, no one is doing CA. Risk factor increased. Risk factor increased. However, at CA final percentage remains same. Passing percentage CA final remains same, but CPT percentage was higher than CA foundation. Understood? So it totally depends upon market expectation. Totally depend upon market expectation. Chalo. I hope you have understood. You are able to understand my emotions, whatever I am saying. Correct? These all are theoretical point. I think you can read. Contribution to future cash flow. Contribution to future cash flow. For assets and liabilities that produce cash flow indirectly, you only say for assets and liability which produce cash flow indirectly. For example, this property, plant and equipment generate cash flow but not directly, indirectly. So we should use historical cost or we should use fair value. Understood what I am saying? Any assets or liability which produce any assets or liability that produce cash flow indirectly, we should use which measurement basis? Historical cost. Correct now? Because it will not affect cash flow directly. So what they are saying, historical cost or current cost is likely to provide relevant information about that activity. However, for assets and liability that produce cash flow directly, then current value is likely to provide relevant information about that activity. Current value, now current value may be fair value, it may be value in use, it may be current cost also. Understood? Current value is likely to provide relevant information about that activity. Got it? But can I say why we are doing so? Means just right, this chapter is not at all important for preparation of financial statement, because for financial statement we'll use Ind-AS, respective Ind-AS. This is only useful to develop Ind-AS. Understood? Means this, in whatever we are reading, it is not for accounting treatment. This is for development of Ind-AS for any new transaction event. Understood? Whatever I am saying. So you don't think that this will follow in our accounting treatment. Accounting treatment, whatever we'll do as per respective Ind-AS. If there is a financial asset, will you come to conceptual framework? You'll go to what? Ind-AS 109. Correct now. Financial liability, you'll go to Ind-AS 109. PP, you'll go to Ind-AS 16. This, whatever we are discussing may not be important. Correct now. So this chapter is only important which provide conceptual framework for development of Ind-AS, for preparation of Ind-AS. Got it? Yes. Now faithful representation, it is based on consistency and certainty. You can read. बहुत हो गया. Correct now. Let us read. When assets and liability are related in some way, using different measurement base for those assets and liability can create a measurement inconsistency. In last class I have given an example. I have said I have taken a loan and I purchased investment in debenture. This I am measuring at FBTPL. This I am measuring at amortized cost. Whether it is correct. Can you say this measurement at different basis will provide inconsistency in accounting? And I said for this we should also use what? FBTPL. You remember? So this whatever is given, because of this para under Ind-AS 109 some exception has been given. An exception is to opt FBTPL initially. You remember? Yes sir. So when assets and liability are related in some way, when they are related in some way, using different measurement bases for those assets and liability can create measurement inconsistency known as accounting mismatch. Correct? If financial statement contain measurement inconsistencies, if the financial statement contain measurement inconsistency, those financial statements may not faithfully represent some aspect of entity's financial position and financial information. Means if this is measured at amortized cost, this is measured at FBTPL. So can I say this will not provide information which is relevant, and this will not provide faithfully representing. It will not represent faithfully the information. Correct? Understood? Yes, sir. Certainty. Certainty. Certainty means there should be measurement. There should not be measurement uncertainty. If there is a measurement uncertainty, it will not be recognized. That is only given. When a measurement cannot be determined directly by observing prices in an active market and must instead be estimated, measurement uncertainty existed. Means whenever the prices are not observed directly from the market, then we need to estimate it, and whenever we are estimating it, there will be some measurement uncertainty. There will be some measurement uncertainty. So what they want to say? A high level of measurement uncertainty does not necessarily prevent the use of measurement bases that provide relevant information. Even though there may be high level of measurement uncertainty, it does not mean we will not measure it. We may measure it if it is providing relevant information. If it is providing relevant information. Therefore, in case of provision, we used to say reliable estimation can be made. If it is providing relevant information, we can measure it. Even though, can I say, because the outcome is in future, there may be some measurement uncertainty, but if you can measure it reliably, then okay, thank you very much. Understood? So there may be some measurement uncertainty because it involves some estimation. It does not mean will not measure it. Will measure it on some basis if it is providing reliable information. Understood? Yes, sir. However, in some cases, the level of measurement uncertainty is so high that information provided by measurement basis might not provide a sufficiently faithful representation. In such case, it is appropriate to consider selecting a different measurement basis that would also result in relevant information. So, if it is not providing if it is not providing faithful representation of measurement, then we can use some different measurement basis. Understood? Yes, sir. However, measurement and this is important para. Measurement uncertainty is different from both outcome uncertainty and existence uncertainty. Means there are three type of uncertainty. One is outcome uncertainty. Then second is what existence uncertainty. The third is what measurement uncertainty. Now for recognition of assets and liability, we always think about outcome and existence uncertainty. Correct now? And if it can be measured reliably, we can recognize the asset. Correct now? What they are saying? But their presence may sometimes contribute to measurement uncertainty. What is the meaning of outcome uncertainty? Outcome uncertainty arises when there is an uncertainty about the amount or timing of any inflow or outflow of economic benefit that will result from asset or liability. Correct now? Understood? Means just try to understand when we have done provision we have done that outflow of resource must be probable. Outflow of resource must be probable means that was certainty outcome certainty. Correct now? I hope you are understanding. So when I am saying outcome uncertainty arises when there is an uncertainty about amount or timing of any inflow or outflow of an economic benefit that will result from an asset or liability. So there must not be outcome uncertainty. If there is some outcome uncertainty, we will not recognize the liability. For asset, we are more strict. If you remember contingent asset, if the inflow is probable, then also we will not recognize. You remember? Yes, sir. Existence uncertainty arises when it is uncertain whether an asset or liability exists. When we say present obligation, the present obligation means what? It is existing. That certainty we have. So that is existence certainty. So when I am saying present obligation due to past event means the obligation exists on reporting date. And if that is not certain, we will not recognize. If I am saying possible obligation, so there is some uncertainty regarding their existence. When I am saying possible obligation, means there is some uncertainty is there regarding their existence, and therefore we do not recognize we do not recognize liability. There is a possible obligation. Remember, so existence uncertainty arises when it is uncertain whether an asset or a liability exists. Understood? Now, what they want to say? If the fair value of an asset can be determined directly, if the fair value of an asset can be determined directly by observing the prices in an active market, means there is no measurement uncertainty. No measurement uncertainty is associated with the measurement of that fair value, even if it is uncertain how much cash the asset will ultimately produce, and hence there is an outcome uncertainty. Just try to understand. You purchase a property, plant and equipment. Now how much cash will be obtained from the use of that property, plant and equipment is uncertain right now. But if you can measure the value of this property, plant and equipment on initial recognition, so there is no measurement uncertainty, even though there may be some outcome uncertainty. Understood what I am saying? So what they want to say? If the fair value of an asset can be determined by observing prices in an active market, No measurement uncertainty is associated with the measurement of that fair value, even if it is uncertain how much cash the asset will ultimately produce. Hence, there is an outcome uncertainty. Means there may be some outcome uncertainty, but there may not be what? Measurement uncertainty. And we can measure it. Understood? Got it? Yes, sir. All are theoretical point. I'm trying to explain, but okay. Coming to point number 4. Point number 4. This you will understand. Factor is specific to initial recognition of an asset and liability. If transactions are at market terms, then what? Can I say initial recognition will be equal to transaction price paid or transaction price received? Simple. At initial recognition, the cost of an asset acquired or liability incurred is normally similar to its fair value at that date, unless transaction costs are significant. If the transaction costs are significant, then we say fair value plus transaction cost now. So I have said in which chapter in DS 109, I have said कि fair value will be equal to transaction price paid in case of asset and transaction price received in case of liability if instrument are at market term. If instrument are at market term. Simple. Therefore, whether historical cost or current value is used on measurement basis, subsequently the same basis is also normally appropriate at initial recognition. What they are saying? Ki therefore, whether historical cost or current value is used as a measurement base subsequently, means subsequently it might happen you are using historical cost or current value, but at initial recognition the price will remain same. Initial recognition the fair value and transaction price paid will be same. But if the transaction are not at market terms, is off market terms, then asset may be acquired or liability may be incurred as a result of an event that is not a transaction of market terms. It may be appropriate to measure the asset acquired or liability incurred at deemed cost. Then we'll find out deemed cost. Deemed cost is nothing but fair value. Deemed cost here means what? Fair value, or better write down current value. For this chapter, it will be current value. Current value can be fair value or value in use or current cost. Understood? It may be appropriate to measure the asset acquired or liability incurred at deemed cost. In some such cases, the current value of the assets or liability is used as a deemed cost on initial recognition. Written also. Means we need to find out current value. As per Ind AS 109, we have calculated fair value. Correct? Yes, sir. Any difference between the deemed cost and any consideration given or received? Given means asset, received means liability. Correct? Would be recognized as an income or expense at its initial recognition. That only we have done. I hope all the points is clear with financial instrument chapter. Means if I would have not done financial instrument, I would have died. Now you are able to understand each and every point because you have done financial instrument chapter. Correct? Yes, sir. This also you have understood. Measurement of equity. Measurement of equity. Can I say equity will be measured? Asset minus liability. Simple. The total carrying amount of equity is not measured directly. It equals to the total carrying amount of all recognized asset less total carrying amount of all recognized liability over asset minus liability. Correct? Then topic number 8, presentation and disclosure. This too you can read by rote. I should read. You can read. Arugya. So fast. Presentation and disclosure. So of course, to facilitate effective communication of information in financial statement, when developing presentation and disclosure requirement of Ind AS, a balance is needed between. A balance is needed in between what? Giving entities the flexibility to provide relevant information that faithfully represent the entity's asset, liability, equity, income and expense, and requiring information that is comparable both from period to period for a reporting entity and a single reporting period across the entities. Means it should be comparable also. Correct? Classification. Can I say we should do classification of assets, liability, equity, income and expense in such a way such that comparison is possible. comparison is possible. You can read it. Can we do offsetting? So offsetting should not be done unless it is required by India. So normally offsetting will not give relevant information. So normally we should not offset one asset with other liability. How we can offset asset liability only as required by India. Correct. So that is given. Offsetting occurs when an entity recognizes and measure both assets and liability at separate unit of account. Means we have recognized assets and liability separately. Assets and liability are recognized separately. Correct. But group them into a single net amount in the balance sheet. But in the balance sheet they are grouped together. That is known as offsetting. For example, we have done provision and reimbursement asset. So provision is recognized separately and reimbursement, you remember reimbursement, if it is virtually certain, recognized as a separate asset. Now in balance sheet can we set off? No, as per India 37 we cannot set off, but in SOPL, yes, we can set off. Understood? So what they are saying, offsetting classifying dissimilar item together. So normally we are classifying dissimilar item together which will not provide relevant information. So offsetting classify dissimilar item together and therefore is generally not appropriate and therefore we should avoid offsetting. Correct? Yes, sir. Aggregation, can we aggregate one asset with other asset, one liability with other liability? Yes. Aggregation is permissible. Aggregation is adding together asset, liability, equity, income and expense that have shared characteristics and are included in the same classification. For example, land 1, land 2, land 3. We can aggregate. Correct now. Aggregation make information more useful by summarizing a large volume of details. So there can be many lands. So land 1, 2, 1000. No. Together one land. If they have shared characteristics, same characteristics. Got it? Yes, sir. Topic number 8 also over. Last point, topic number 9. This is what thoda sa practical. Means for topic number 9 we'll take some questions. Correct? So of course let us do it and complete it. Correct? Now concept of capital and capital maintenance. Concept of capital and capital maintenance. What they are saying, this chapter conceptual framework are saying there are two ways of maintaining capital. One is maintenance of capital under financial concept. One is maintenance of capital under physical concept. So what is this? Before coming to the what explanation on this, just try to understand. Let me give you some idea why we are doing this. My question to you all, suppose you invested 10,000 in your business initially and at the end it become 20,000. What is your profit? Retained profit is what? At the end means after 1 year, 2 year, 3 year, whatever, it become 20,000. So what is your profit? Bolo 10,000. So stay with me. 10,000. You might be thinking, so what is this? 20 minus 10. This is your retained profit. Retained profit means after drawing, after distribution of dividend, retained profit in the entity. Correct? This profit is calculated as per financial concept. We call it financial profit. This is not physical profit. Means this profit is known as financial profit because we are maintaining capital under financial concept. But just try to understand, everyone, if you invested 10,000 here and let us assume this is 1 year time, my question to you all, after 1 year without doing business, whether the value of money will remain same. Understand what I am saying? My question to you all, you have 10,000 and you are not doing any business, you are not doing any operation. My question to you all, after 1 year, what will be the value of this amount invested? Huh? It will be 10,000, more than 10,000. 10,000. Nalayak, you do not time value of money. It will remain 10,000. It will remain 10,000. अरे बोलना रे. Means you are not doing operations, but of course you will invest somewhere else, na? अरे you are a prudent businessman. You will keep in your cash in your hand. Hello, 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 hello. बोलना रे. Nalai. So suppose 10% is the rate of interest, it will become 11,000. Correct? Means without doing any business, it will become 11,000. And due to business, it is 20,000. My question to you all, what is profit? Profit is not 10,000. Profit is what? 9,000. This is profit under physical concept. Understood? Means, can I say we are ignoring what? Time value of money in our financial statement. I hope you are understanding. Correct now. So these are two ways of calculating profit. So what they want to say? What they want to say? The selection of appropriate concept of capital by an entity should be based on need of the user of his financial statement. What is the need of the user of his financial statement? Means either we can use financial concept or we can use physical concept. Thus the financial concept of capital should be adopted if the user of financial statement are primarily concerned with the maintenance of nominal invested capital or purchasing power of invested capital. Have you understood? Not understood. Correct. I will explain. However, the main concern of the user is with the operating capability of the entity. If the main concern of the user is with the operating capability of the entity, means what is the operating capacity of the entity, then physical concept of capital should be used. Then physical concept of capital should be used. You can see in this we are able to identify what is the operating capacity of the entity. 10,000 is not the operating capacity, 9,000 is the operating capacity of the entity. Understood? Correct. But if the user are not interested about that, user are mainly concerned about the maintenance of nominal invested capital or the purchasing power of invested capital, then we'll use the concept of then we'll maintain the capital under what? Financial concept. Understood? Let me take one question. With the question I will try to explain. With the question I will try to explain. So this is what? You have question bank? You have question bank volume 1. So please take it out. If you do not have question bank, then see the screen. Whatever. I will not see only you. Acha, these all illustration first can you read? Most of the answer will be based on other Indias. Correct now. But first you read. I will not read it because I have done most of the reading. You just read it. Any doubt? I will discuss. Okay. So don't worry. You will have no doubt. But if you have doubt, I will discuss. Come to this question. Illustration number 5. Very important. If they will ask, they can ask this question. However, all the illustrations are very important because this is an amendment. A question may be expected from this chapter, same to same. They will do copy paste. Copy paste. Okay. There are how many? 5 illustrations are there. Only 5. And then one question is there. 6 questions are there. Other sources leave. Correct now. 6 questions are there. It will take 6 minutes. Correct now. अरे बोलना रही. Where is that question? A trader commenced business on 1/1/2001 with rupees 12,000 represented by 6,000 units of a certain product at rupees 2 per unit. 6,000 into 12,000 means they invested how much? 12,000 and they purchased inventory how much? 6,000 into 2. During the year 2002, he sold these units at INR 3 per unit and had withdrawn 6,000. So they have sold, means initially it was 12,000, correct? Then they purchase inventory of 12,000 minus 12,000. Then they have sold entire 6,000 into 3. How much? 18,000. And they have withdrawn how much? 6,000. What is the closing capital? 12,000. This is the closing capital is 12,000. Got it? Yes, sir. The price of the product at the end of the year is 2.5 per unit. In other words, the specific price index applicable for the product is 125. This is consumer price index. Do you know about consumer price index? Do you know about index? Consumer price index. This all thing you'll do in SFM. If you have not done, they will give you the detailed discussion about this index. Correct. Now, consumer price index. I think in economics also you have done. You have done now. I don't want to go into that. If you don't, good. If you don't know, refer Google Baba. The average price indices at the beginning and at the end of the year are 100. Achha, average price indices. This is what consumer, sorry, mistake. My mistake. They have given at the end. Means the average price indices at the beginning and at the end of the year is 100 and 120 respectively. This is what? Price. They have written price index. Correct? Okay. And the price of the product at the end of the year is 2.5. This is what? Can I say this is current cost? When I am saying the price of the product at the end of the year is 2.5, means similar unit can be purchased at the end of the year at rupees what? 2.5. That become current cost. That become current cost, and this become consumer price index. They have written, in other words, the specific price index applicable to product is 125. Means they have calculated based on what? Initially it was 2, now it become what? 2.5. Understood what they have said? Initially it was 2, now it become what? 2.5. Okay. Find out financial capital maintenance at historical cost, financial capital maintenance at current purchasing power, and physical capital maintenance. Physical capital maintenance means it is at current cost. At current cost. Understood? I will explain with the solution only. This question will come for 6 marks. Already have been asked in previous attempt because this concept remains same as per previous chapter in and this chapter. This concept remain same. Now, first I will take financial capital maintenance at historical cost. My question to you all, what is the closing capital at historical cost? Already we calculated 12,000. Already we calculated. Then we'll compare with it opening capital and additional capital. Opening capital and additional capital means, can I say, if you have done single entry chapter, in single entry chapter you used to calculate profit. How you used to calculate profit? Closing capital less opening capital plus additional capital minus what? Drawing. If we deduct this from this will what? Profit only. Correct. That is only given. Closing capital historical cost 12,000 less capital to maintain at historical cost. So capital to maintain historical cost, what was the opening capital? 12,000 and additional capital in this question 0. Correct. So opening capital at historical cost 12,000 and introduction at historical nil. So what is the opening? What is the capital to maintain a historical cost? 12,000 means retained profit is what? 0. Retained profit is 0. Means just try to understand. They have sold at what? 18,000. The cost was 12,000. Profit was 6,000 and this was withdrawn. So retained profit is 0. So as per financial capital maintenance, under historical cost, retained profit is 0. Correct. Now coming to financial capital maintenance at current purchasing power. Current purchasing power. Correct. So what is the closing capital? 12,000. But can you say now capital to maintain should be calculated at current purchasing power? Understood? So you can see capital to maintain opening capital at closing price. So you can see they have given what? Initially it was 100, now it become what? 120. So what was the opening capital at historical cost? What was the opening capital at historical cost? 12,000 into what? 120 divided by what? 100. Means if you want to maintain that capital at current purchasing power, how much capital should be maintained? 14,400. But you have maintained only what? 12,000. It means there is a negative profit. Therefore, retained profit in this case will be 2,400. 2,400. Means if you are maintaining your capital under current purchasing power, you have a negative profit. Negative profit, retained profit 2,400. Have you understood this point? Hmm? Bolo. Not understood? Not understood? Understood or not understood? Means your close, just right. Your closing capital is what? 12,000? Correct. Now, if you just try to understand, if you once again want to purchase inventory, so you will purchase inventory based on current purchasing power. Understood? Current purchasing power now. So initially it was 2. The price of the inventory is 2. 2 into, now it become 120 divided by 100. How much? It is 2.4 into 6,000. How much? Means 14,400 is required to purchase the inventory. But you have how much? So can you do the business once again? No, means you have a negative retained profit now. Means can I say you should have earned 2,400 as retained profit, but you have not earned that. Means you can't match with current purchasing power. Understood? At historical cost, okay. But at current purchasing power, you should maintain how much closing capital? 14,400. But you have how much? 12,000. It means there is a negative profit now. Means as per current purchasing power, you should have earned 2,400 more, additional 2,400, but that you have not earned. Understood this point? Not understood. Not understood? Once again I will explain. Once again, what I am saying, just try to understand. Initially, how much capital invested? This is capital account. To bank how much? Sorry, by bank how much? Then how much profit earned? Profit earned. It is 18 minus what? 12. Then how much drawing? 6,000. So what is closing capital? You have a closing, means you have a closing capital of 12,000. Correct. But just try to understand. Now once again you need to purchase inventory. If you want to purchase inventory as per current purchasing power, how much capital you should have? Means initially the price of inventory was 2. But as per current purchasing power, it will become 2 into 120 divided by 100. That is what? 2.4. How many inventory you should purchase? 6,000. 6,000 into what? 2.4 is equal to 14,400. Means you should maintain 14,400, but you have only 12,000. Means you should have earned additional profit of 2,400. अरे बोलना, which you have not earned. Therefore, there is a negative retained profit. Understood now? Now understood? Correct. Then coming to physical capital maintenance under current cost. Physical capital maintenance under current cost. Now, in this Thora I have not understood why institute has given this answer. Why ICA has given this answer, that I have not understood. Let me give my viewpoint, then I will come to this viewpoint, because I will not change the solution. Understood? As per my viewpoint, answer should be this. Closing capital is 12,000. Now capital to be maintained, opening capital, how much? Opening capital we have how much? It is 12,000 into what? What is the current price? What is the current cost? Current cost become 2.5, or you can take 125 also. We can do 2.5 or 125. Let us take 125. So into 125 divide by 100, how much? 15,000 and additional capital 0. As per my viewpoint, answer should be 3,000 negative. Correct now. This should be the answer. But here they have changed this also. Means they are calculating closing capital also at current cost. That I have not understood. They are calculating closing capital at what? Current cost. Means my answer is 12,000 minus 15,000. That is negative 3,000. But they are calculating closing capital also at what? Closing capital also at what? Current cost. Understood. So how they have calculated closing capital at current cost? Let's see. It is 9,000. Understood. You can see this is correct, 15,000. As per my viewpoint, it is 12,000 minus 15,000. That is what? 3,000 negative. But they are saying closing capital should be also at current cost. How they have calculated? Let's see. You can see. Just try to understand. Closing equity at closing current cost is 9,000. How they have calculated? Let's see. Current cost of opening stock. Oh my god. Current cost of opening stock. What was the opening stock? 12,000. 12,000 into 125 divided by 100. So they have first calculated current cost of opening stock, that is 15,000. Or we can directly do 6,000 into 2.5. Means if you would have purchased opening stock at current cost, then it would have been 15,000. Correct? Understood this point. Then closing cash after adjustment of stock at current cost means 15,000 minus 6,000. 6,000 is what? 6,000 drawing. Understood. So 6,000 2.5, 15,000 minus 6,000. This become what? Closing cash. And closing cash become what? Closing equity, closing capital. Understood. This point what they have done? Not understood. Means what they are saying, if you would have calculated closing capital at current cost, then what would be the closing capital? What would be the closing capital? Means simply what they have done, suppose 6,000 was the unit and it is suppose sold at 2.5 only current price, then how much amount we would have received minus how much drawing we have done, means what will be the closing capital at current cost. The closing capital at current cost would have been how much? 9,000. Because I have not understood. I have also not understood what they have done. Means I don't understand what they are doing. Are you able to understand? But this has been amended solution. Initially they used to give this solution, whatever I have done. But now due to change in syllabus, change in the chapter, they have changed the solution also. But I don't understand why they have changed the solution. Why they have taken this as 9,000, that is not understood. But even though we have not understood, we need to do this only. But what they have done, I hope you have understood. 6,000 into what? 2.5 minus what? 2.5 na? 6,000 and 2.5, 15,000 minus what? Drawing 6,000. So this become closing capital at current cost. Minus opening capital at current cost. This will be what? 12,000 into what? 125 divided by 100. The difference is what? Negative profit, that is 6,000. This should be maintained. Understood? Have you understood this much? Got it? Have you understood this much? Correct. So with this, I have completed all the point. Let me read only the last concept. The entire chapter will be completed from my viewpoint. What they have given. There are two concepts of capital maintenance. Financial capital maintenance. Under this concept, a profit is earned only if the financial amount of net asset at the end of the period, financial amount of the net asset means equity only. So we can say the financial amount of capital at the end means closing capital at the end. Can we say closing capital at the end? So financial capital at the end exceed the financial capital at the beginning of the period after excluding any distribution and contribution from the owner during the period. Financial capital maintenance can be measured in either nominal monetary units or under or units of constant purchasing power. There are two ways of calculating financial profit, either based on nominal monetary unit or based on constant purchasing power, means based on purchasing power index. Got it? Yes, sir. Under the concept of financial capital maintenance, where the capital is defined in terms of nominal monetary unit, profit represents the increase in nominal money capital over the period. Thus, increase in the prices of the asset held over the period, conventionally referred to as holding gain, are conceptually profit. Means any increase in the asset also will be considered as holding gain and will be transferred to what? Profit only. Normally we are using this concept. Got it? Yes, sir. In this one, how to calculate closing capital including reserve and surplus at historical cost. In this question, they have not given a reserve and surplus. Means when I am saying equity, equity will be including reserve and surplus. Correct? So closing capital at historical cost, less capital to maintain opening capital at historical cost, additional capital contribution at historical cost. These two minus करेंगे from this, it will become financial profit. Yes, sir. Physical capital maintenance. Under this concept, a profit is earned only if the physical productive capacity, that is operating capability of the entity at the end of the period, exceed the physical productive capacity at the beginning of the period after excluding any distribution to a contribution from the owner during the period. Under this concept, when capital is defined in terms of physical productive capacity, profit represents the increase in that capital over the period. All prices changes affecting the asset and liability of the entity are viewed as a changes in the measurement of physical productive capacity of the entity. Hence, they are treated as capital maintenance adjustment that are part of equity and not as profit. Means in this case, any adjustment in asset and liability will not be transferred to PL. That will be adjusted with capital only. Correct? Directly to equity. Directly to equity. Means that will not be a part of profit. That will not be a part of profit. In this case, closing capital including reserve and surplus now written at current cost as per suggested solution at current cost. Understood? At current cost. Understood? Yes, sir. Less capital to maintain opening capital at current cost, additional capital contribution at current cost. If you deduct this from this will be physical profit. The principal difference between two concepts of capital maintenance is the treatment of effect of changes in the prices of assets and liability of the entity. Means in case of first concept, the changes in the value of assets and liability will be transferred to PL. In second cases, changes in the prices of assets and liability will not be transferred to PL. It will be transferred. It will be adjusted with what? Equity. It will be adjusted with equity. Understood? So with this, we have completed this chapter, full theoretical chapter. I hope you have died today. You have died. Correct. I just tried to the same thing with me also. It is not easy to teach theoretical subject. Correct now. I always say practical subject is more interesting to teach. Theoretical subject, all theoretical guru are guru. Correct. But I can also teach theory subject na. बोलना रही. I started my career with audit only. Then I understood no one is interested to learn audit conceptually. I started my career with audit only. But I understood students do not listen only. They want for rectification. Then I said, no, Baba. Audit I can't teach so much in detail. If I'll teach audit in detail, no one will come to me. Understood? Therefore, I stopped teaching audit. Correct. That was the reason. 1 minute, 1 minute, 1 minute, 1 minute. This question number 1 to question 5 are very important, huh? Because question number 1 to question number means all these questions are very important because one question pakka may come in exam. But if you read, you will be able to understand. If you are not able to understand, you need to inform me. We'll discuss in class. There is one question from other sources which I have intentionally taken in this chapter, question number 2. So that I will do, don't worry. That I will do, don't worry. Okay? Chalega? For today, this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.